All right, guys. Honestly, honestly, you know what's really surprising? Like, look at how much FR or look at how much SQ bounced back. Like, I try to tell people, man, nobody ever listens. Like, look at this. This thing bounced. My profit target in this was 64 too. It went up to 65, 66. You know, sometimes people they just pick a side and they're obsessively loyal to that one side and they don't really like they're not fluid enough with it. Like they need to be able to switch sides. I told you guys about this one yesterday. I didn't want you to copy me. I don't want you to copy me, but the logic of the trade makes sense, you know, and it obviously made sense. I was absolutely correct about it. It bounced back very quickly after the opening bell. Yet I just got crapped on as soon as I entered the trade. Everybody started making fun of me, and it's like then when it goes in my direction, it's just silence, you know, and it's just kind of like, man, stop being so one dimensional, everybody. Not you, not anybody specific, but like, don't be so one dimensional, traders. Like, there's no reason to be. Like, you can take both longs and shorts, like I do. Um, hey, what's up, Game, Matthew, Bar, DS, John, Emmanuel, Mac? Deutsche Bank is starting. Stock is tanking 13%. Is this the next shoe to drop? Credit default swap spike sharply for Deutsche. Dollar index is pumping on the news. Yeah, the market fell to 390s here. I don't know, man. I think we're at 391s right now. And I think the market's been very sideways, man. You know, like I think we can look at it, but like we're basically where we were 10 days ago. And since then we've gone down and up and then back down. And so I I don't know. 20-day chart, we're pretty sideways too. 90-day chart, we're pretty sideways. Uh yeah, we're gonna get some background music. Hold on. Today we have durable good orders. All right, let's get some background music playing. Hey, what's up, Beach? Yeah, we're also gonna do a poll here. Uh, there we go. Yeah, we got the spot in the middle square at 59s here, which is still probably above where I bought it yesterday. But I mean, this is the kind of if you guys remember me saying, I said, hey, this thing could bounce back half a gap, it could bounce back a little bit. And yeah, man. Honestly, I should have stayed in it longer. I'm gonna go to different music because everybody complained so much about the music yesterday, and so go back to some old music that we have here. Yeah, maybe it's a big flag, um, but maybe not. I think we have to look at it objectively too. I think people have been saying it's the end of the world for months and months and months now, and I'm not seeing it yet. Um, Bullish or bearish on today's orbital goods order drop at 8:30. Um, and maybe we do crash. I'm not saying we don't. That's the first misconception people have watching the stream is they're like, "Oh, this dude's a permabull." I'm really not. Like, all I'm saying is that we're sideways over the last 10 days. What's the symbol bar for Deutsche? I know of Deutsche Bank. What's the symbol? It is DB. This is Deutsche right here. Well, I mean, they're down, but they're not catastrophically down, Like, they're down. Here's Deutsche right here. It's at about 880 right now. Closed at 960. So, I mean, it's down. Down about, what, 10%? It's definitely not good for Deutsche, but is this going to be a company destroying drop? I don't know. I personally believe there are way too many feelings involved in market. Yeah, but no offense to the German market bar, but our market's not necessarily propped up on the German market. We have Deutsche stock in the U.S. on the New York Stock Exchange. It's under the symbol DB, and you can kind of see the drop. It's down about 10%. But I guess what I'm saying is it doesn't necessarily mean that what people have to really understand is that some banks are gonna go, in this situation. Some banks are gonna go. That's everybody's expecting that. Some banks are gonna fail. The Fed already said they're not gonna save all the banks, and so some banks are gonna go. The real question in that is, which ones is it? City, what's the symbol? Or city, what is C, right? Yeah. Banks are down a little bit. Why are we down again? Well, the market's down to 91, I guess, from people fearing the banks right now. Let's look at JP Morgan. Down a little bit. I can buy JP Morgan up too if it drops enough, but I don't know if we're going to do that yet. FRC all the way down to 1204. So just bank weakness again this morning. Yeah, Citigroup, Wells Fargo, Bank of America, JP Morgan, Chase. Yeah, for sure. I feel you, Damien. And like I said, bro, maybe that happens, man. I'm not saying that doesn't happen. You know what I mean? Like, I'm not saying that we don't get a cataclysmic effect from this. I'm not saying that's not going to happen. What I'm saying is that we're not there yet. One of the things that I've seen happen a lot, and again, I'm not saying we're not going to keep dropping. All right, like, I'm going to preface that. I'm sure if we do keep dropping, everybody's going to be like, aha, see, I told you so. But I'm not saying that doesn't happen. But I think sometimes, like, the market's been like this lately, where we drop. Everybody says, oh no, this is it. The market is done. Everybody says, oh no, the market is done. This is it. and then the market bounces back, and then the market does this, and then everybody says the day is saved. Woohoo, the day is saved. The market's not over. And then the market does this again. And then everybody says, oh no, it's the end of the world as we know it. And then back and forth, and the SPY bounces back up to 400, and then everybody says the banking disaster is averted, And so I think it's easy to sensationalize these moves, and maybe it happens. But like, again, I look at the chart price action here, and like, we are break even on a 10-day chart for the most part. We're slightly down. We're basically break even on a 20-day chart. No, 20-day chart, we're down for sure. No, this is JP Morgan Chase. I'm sorry. 20-day chart, we're slightly break even. 10-day chart, we're a little green on a 10-day chart. 6-month chart, we are flat. We're slightly green on a 6-month chart. Yearly chart, we are down, obviously. Weekly chart, we're green, So, I mean, maybe we're there. FRC bouncing back to 1230s this morning. And maybe we're not. I don't know. I'm going to wait and watch to see if it happens. Right, for sure, Beach, 100%, man. I've been buying these dips and making money like crazy. And again, maybe this is it. I'm pretty flat right now. I don't really have anything right now. I've got a little bit of Disney. Like 10 shares of Disney. I took profit yesterday and then fallen more, so I'm kind of flat on the rest. But and again, I hope you guys understand. I'm not against you if you're bearish. I'm not, And we do have some economic data coming out in a couple weeks to influence the market. So today we got durable good orders, not necessarily a conventionally big release today. We do have England composite data just came out about an hour ago that was less than expected, maybe optimistic. Durable good orders today. Core retail sales for Canada today. And then next week will be an interesting week. So next week, quiet for Monday, I think. Yeah, Monday's quiet. Tuesday, we've got the CB consumer confidence at 10 dropping. That'll influence markets a little bit. Wednesday, pretty flat Wednesday too. Pending home sales Wednesday, crude oil inventories at 10:30. So Wednesday's slow. But the big stuff pops off on Thursday and Friday of next week. Thursday, we have GDP data and jobless claims, of course. So GDP data coming out on Thursday. Expectations for GDP are 2.7%. Last time it was 3.2%. So 2.7% GDP growth is expected. And how will that influence markets? Jobless claims expected to show up at 191. That's on Thursday for GDP and jobless claims. Friday, we have the PCE deflator. Core PCE index is what it really is called. So the core PCE price index. Expectations for that, which is an inflationary gauge that the Fed uses. The Fed is actually, so the expectations for PCE next week are that inflation is going down in that regard. Last time it was 0.6%. They're expecting it at 0.4% on Friday next week. So that's an interesting gauge of inflation as well. And yeah, we'll see if that influences everything. We got Canadian GDP Friday too. So that's a relatively big release, followed by, looking at the week after that, followed by ISM manufacturing PMI the Monday afterwards. Joel's job report after that. ADP non-farm employment data after that. ISM manufacturing PMI after that. Thursday, we've got jobless claims. And then Friday, we've got We got non-farm payrolls on Friday. But the market's not open. Is the futures market open Friday? So it's like we're going to stream non-farm payrolls, but the market's closed the Friday afterwards. And then after that is when the real chaos starts. So after that, I think we get CPI the next week. Not 100% sure, though. It's still kind of early to look at the reports that are coming out. They don't even listen. Yeah, so CPI is going to be Wednesday, April 12th. So, ooh, man. So, yeah, so the biggest, most volatile day coming up is going to be the 12th of April. That is going to be the most volatile day. Again, the 12th of April in about 2.5 weeks. On that specific day, you have core CPI coming out. You got CPI data coming out. You got CPI as well as the FOMC minutes report. That's probably going to be the most volatile day we got coming up. After that, we got PPI. And I don't know what we got after that. We also have earnings season that's going to be starting sometime in the next month here. So earnings, I don't think we got Express earnings this morning scheduled to drop. I think they're out already for Express. So Express earnings are supposed to come out. All right, so we got some comments regarding Deutsche. The European Central Bank's Nigel says there's often a bumpy road after similar instances in the banking sector. So he said basically like there's always kind of issues like this after banks have problems like they have over the last few weeks. He said, not surprising, there have been market moves. He said on Deutsche Bank share slide, he will not comment. But he says that basically this is normal. He also said that there's a high probability that the ECB will fulfill its mandate in the end. The current rate is not high in comparison to the inflation rate. So basically, he's saying if banks are struggling, it's on them. What's up, Maximum? You know what I'm proud about? We are one of the largest streams in this early hour of the morning, every morning. So shout out to us, because we're the only person really out here talking markets. See, they got a lot of other channels, but like a lot of these other channels aren't even there, I must admit the market's been more resilient than what most YouTubers say. Except for me, right? I'm the only one that's been sitting here in the heat of the fire being like, yo, again, I call it the Michael Burry effect is what I call it. And maybe the market falls, maybe the market crashes, right? But even if it does, a lot of these guys are still wildly wrong. You can't say a crash is imminent 6 months ago. And then if the market crashes 8 months later, say, aha, see, I told you. It's like, bro, the problem with the trading world is that they give out vague price predictions. And then when anything similar like that happens, even though they know they didn't really call it, they try to take credit for it. That's the biggest problem with the chat as well. The chat will do the same thing. The chat will say, hey, guys, SPY's going to hit 398, you know. And then the SPY falls down to 390, and then the next day they're like, "See, I called this." It's like, bro, no, you didn't. Like, sit down, you know. uh, what's the Burry effect? The Burry effect is everybody sees Michael Burry calling for market crashes. Everybody sees Michael Burry calling for market crashes every year. Burry has called for a market crash. I think traders watch The Big Short. They watch the movie The Big Short with Christian Bale as Michael Burry, and they idolize Burry. And so by idolizing him, they weigh too much on his bear predictions. And so then when he makes these big bear predictions, then they all piggyback off of those. And they all say, yeah, the market's going to crash. The market's going to crash. It trickles into YouTube and influencers. It trickles into comments here. It trickles everywhere. And then when I'm like, hey, look, maybe the market crashes, but like we're not there yet, then they think I'm attacking their idol, you know? And so then they get mad at me. That's what happens. That's the Burry effect, I would say. Because again, I'm really looking at price action. I don't think the market's necessarily in trouble until we break under 375 right here. I think if we break under 375, that'll be the last time we hit that low was in December. So months and months ago. So I think if we break under 375 or 370, I could also look at 370 right here. I think if we break under 370 or 375 on the SPY, if we look at the S&P 500, the same level would be right around 3,700 on the S&P 500. If we're looking at the Dow, this level would be right under 3,000, I would say. If we look at like whatever other market ETF, the Q, if we break under like 270, you know, that's when I'm going to start worrying. That's when I think a crash is more imminent and more likely. Not necessarily imminent. I think it's just a little bit higher probability. But until then, I think you got to, I'm just ignoring the smoke, you know. And again, I will add, I think this Deutsche Bank problem is not good. You know, I think this Deutsche Bank problem, if we are going to crash, this is how it happens. And again, because everybody says I'm a perma bull, and I'm really not, you know. Like, I understand the risks of a crash, to put it into perspective. Like, I understand there's risks, especially with banks, especially with rate hikes and the Fed not doing 0 basis point rate hike and instead doing 25 over this last Fed meeting. I understand that hurts the bank margins, that they've got themselves in a tough position, and some of the small ones will fail. And that has the likelihood of trickling into the large ones and everything else. And then that might cause a trickle effect, a domino effect that drags everything else down. I think that's a probability. Or I think that there's a chance that happens. I don't think it's necessarily a super high chance, but I think there's a chance that happens, you know. And I think that if you don't think there's a chance that happens, I think you're just being blind to it. Just to give the Bears a little bit of, you know, like, look, I get it, you understand it, and I think there's a chance, you know, but short term, I don't necessarily think it's a super high chance. And I think that there's a chance that we also don't do that, and that we also just kind of rebound back, and you know, the market starts to focus on inflation, that the Fed was optimistic and we've got some time, especially if like PCE comes in a little bit lower than expected on Friday of next week. If Thursday GDP data comes in low, I think all of that will be seen as a very positive thing for the market. I just don't know if Deutsche has fallen down enough to really, you know, have those fears. Are you really trying to act like I'm not profitable in swing trading? Gained weight. Again, I will say this. I am very green on the year in my TD Ameritrade account. Very green on the year in my TD Ameritrade account. And if I lied about it, I would get in trouble 100%. Like, I'm not, like, if I was to lie about being green this year on TD Ameritrade, I would get in a bunch of trouble. You know, so there's no way I would ever lie about being profitable this year on Thinkorswim. My swing trading, I would say, at least has like a 60 to 70% accuracy rate. I am 100% green with my swing trades. And yeah. Why is the market dying? Yeah, I mean, I don't know if it's dying. SPYs break even over the 10-day period. Oh, now you the general public. I was about to say, bro, listen. My swing trades have been incredibly accurate. Again, SQ is a prime example of this. I got crap doing when I bought this thing yesterday. Everybody started making fun of me. Everybody said, aha. You know, people called it a hunch. Said I wasn't planning my trades. It was just a hunch. Just to put it into perspective, I bought SQ here. You know? Yeah, I was about to say gain weight, shots fired, bro. You know, I was like, you don't want to go there. I will engage with trolls here because I have a duty to prove them wrong. You know, like I said, again, the easiest way you can tell is that I could get in trouble if I lied about being profitable in 2023 on TD Ameritrade. I could get in trouble. You know, I could very easily get in trouble. I am green on Thinkorswim, swing trading and day trading to a certain extent. I have to look at my stats. I'm pretty sure day trading too, but certainly swing trading over the last, couple months. I've been very profitable doing so. I bought up Disney at low 90s. Disney ended up going up to like 120 afterwards. I bought up Snapchat. I bought up Google, at low 90s. I bought up Amazon at these pretty cheap levels as well. But yeah, I bought SQ here. And as soon as I bought it here, everybody started making fun of me. They say, oh, this dude's not planning his trades. He's buying off of a hunch. It's like, it's not a hunch if you've done it a bunch of times before and made money. Like the problem people have is emotion. Like people want to jump on the bandwagon in stocks, and like I'm there to take the counter trade to that. So like Square dipped huge percentages, like ridiculously large percentages. This thing dipped like 30%. If it was at 75 before the dump, it would be roughly 30% down to 50. Not quite 30%, a little bit less than 30%, but still it dipped at least 25%, very quickly within 20 minutes, And again, the short report was not good, of course. The short report for SQ was not good, but once I started to see the bear action slow down, like once I saw this bear action start to get a little quiet, meaning like maybe this move was done, like once I start to see this chop right here, once I start to see this kind of choppy behavior, instead of seeing like a big other leg down like this, instead of seeing that, we started to see this. That's what I'm like, okay, hey guys, I'm going to go ahead and buy that. And again, it's okay to be bearish, guys. Like, it's okay to be bearish. But, like, you don't want to be universally bearish in everything. That's not a profitable mentality, Like, being universally bearish. Like, it's fine to be bearish in the market on the SPY today or on the SPY over the next year. If you think the market's going to crash, fine. Be that way, But being universally bearish where it's like anytime somebody takes a long trade, you're trying to make fun of them. It's just not going to make you money, And then, of course, if you look at what SQ actually did after that, look at the open for SQ. This thing bounced all the way back to $66 a share. Basically, bounced back 50% of the drop that it made within a couple hours. This is why, I saw some big traders taking big short positions on SQ. I saw them taking these short positions here. Big time traders, like really famous traders, posting their entries of short positions here on SQ. Now sure, I'm sure they're going to say that they held it through this whole move and that everything's fine, but did they really though? That's the question I have. Oh, for sure, Beach, 100%. The ones claiming the market is dying, and I don't think they're all going to do this. I'm not buying this dip yet. Jeremy says the ones claiming. I don't think everybody that thinks the market is dying in that. I think there's certainly a certain percentage of people who are like this. Jeremy said the ones claiming the market is dying are just individuals who may be in too deep on bad trades, 100%, and continue watching their money go away instead of playing winning plays, trying to bring everyone else down, 100%. That's what a lot of them are. I'm not saying it's all of them. I think there's some people who genuinely think the market's in trouble, and I understand that thought process. I really do, and that could happen. You don't want to be too rigid on one side And so I try not to be, and I understand the risks of the market right now. I understand that the biggest risk of all of this is that the banking problems could trickle into everything else. And with the 25 basis point rate hike, some of the banks' margins are not going to be as good as they want them to be. Some of the smaller ones are going to fail. It just depends on how well the they can contain that weakness in banking. That's the big question mark: is can they contain the weakness in banking? Um, and I don't know. We'll see. But yeah, it'll be interesting to watch what happens. Uh, yeah, but SQ shot up at the opening bell. I mean, it dropped a little bit in the first 3 minutes, but after that, it pushed up to $66 a share. Puppy. I know somebody said, "Oh, it's cute puppy versus John," and like, you know, again, you guys remember where I bought this thing? I bought it here. And honestly, I would have loved to say I held it through the open, but I didn't. I bought it here, and then I sold it here. You know, and understandably so. I mean, I was up very, very decent in just a couple of minutes. So you know, why did Tesla go down? Because the whole market's down right now. Everything's down at this point. Tesla down. Tesla's up so much already though over the past week or two that like look at a 10-day chart on Tesla. Tesla was at 170. It's at 190, hit 200. So Tesla's up a lot over the last week and a half. SPY started to bounce back a little bit here as well. But I guess the point is like people have to understand extension. Like the market has this way of doing the opposite of what the group think is. All right. So like if the market dips a lot over a couple day period and everybody's saying the market's over, it's a bear market, the market has this tendency to do the opposite of what people think, right? And the market has a tendency to bounce back in those situations, and vice versa. Stocks gap it up huge percentages when everybody's saying, "Oh yeah, to the moon." The market has a way of humbling those people and just dumping whatever stock it is down. Happens a lot, and so the market is very contrarian, and that's the way I tend to trade it. Yeah, for sure. Type. Just trade it how you can. That's all you can do. Deutsche is what you should watch. I think that's given a lot of influence. FRC. Should I buy the dip here? I hold a little bit of Disney. If I do anything, I'm just going to add a little bit of size back to Disney, but we're basically flat on the Disney trade. Bullard speaking at 9:30. What does he speak? I see more bulls than bears. I certainly don't. I think I see far more bears than bulls right now. But I guess it varies. But I mostly see bears. Bears are usually. I cover a lot of these economic releases, and generally, it's mostly bears. All right, guys. Yeah, market is sideways here. Like I said, if I do anything right now, I might add a little bit to my Disney trade, but I think I got to be patient too. Deutsche is what you can watch to see if there's some like influence here over the rest of the market. I think a lot of people are worried about Deutsche right now. Disney announced a wage increase for workers to $18 an hour. Should be a nice dip to buy today. Yeah. Fed Bullard speaking. Where's Bullard speaking at? I can cover that if you guys want me to. FRC bouncing up a little bit short term. And again, we got to watch the banks to see what they do. Oh, yeah. Good luck, Ernie. Just be careful, brothers. The only reason I haven't bought banks. Hey, what's up, Chris? Yeah, for sure. But yeah, so the only reason I haven't bought banks is because I think there's, like I said, and I'm usually like a bottom feeding dip buyer of a trader. Like I usually wait for big pullbacks and healthy stuff, and then I buy those dips. The problem with banking right now is that I don't know when this is going to be over. You know, the reason I'm not buying banks, and the reason you haven't seen me buy one dip buy in banks throughout all of this, is because I don't trust them right now. I simply don't trust banks. I think the economic situation we're in is too vulnerable for banks, like makes banks too vulnerable. I mean, and so in that regard, I just don't trust buying them right now. You know, again, think about how much I buy cheap emotional pullbacks. Some people might think that I would be one of the ones buying up FRC or buying up. If I do buy a bank, it's not going to be FRC. It's not going to be Silicon Valley. It's not going to be Signature. It's definitely not going to be Deutsche. If I buy a bank, it's going to be like JP Morgan. Because I think that there's no chance that the large banks fail. There's no chance JP Morgan, Wells Fargo, Bank of America, and Citi fail. So if I buy a bank, I'm buying the big four. And again, but the question regarding those is, when does this end? You know, and again, I don't know when that is. I really don't know. All right, SPY at 390.5s, 390.5s. I wouldn't touch a bank stock with a 10-foot pole. Yeah, not right now, man. Bullard at 1030. What is he speaking with in regards to? I guess is the question. What is he speaking in regards to? Yeah, I heard you. It's all good, bro. Yeah, it's all good, bro. Personally, I think you're a little cocky, but that's how you have to be for YouTube in this market. Honestly, bro, I'm definitely one of the top 3 greatest traders of all time right now. I have no idea what I'm doing, though, and I might be wildly wrong about everything. Don't copy me. But I have to be this way. You know, and I think that's what you said. I genuinely have to be this way. The only way to deal with trolls is sarcasm, you know? So, I mean, I just have to be wildly sarcastic with everything, you know? It's not that I want to be this way. I mean, honestly, I'm a little confident in real life. You know, Carol can attest to that. Like, I'm not going to say I'm the same way in real life because obviously I exaggerated here for entertainment and troll purposes. But I don't lack confidence. I guess that's the easiest way to put it. But I appreciate it. But yeah, just understand, like, when you're dealing with trolls, you got to be that way, man. Market's pulling back to 390. But no, it's all good, bro. I know you weren't talking about me. I might have initially, and then I recognized that you were talking about everybody, you know. Yeah, Deutsche Bank breaking lows, 855s right now. Market does not like that, pulling down a little bit as well. So again, I'd watch this Deutsche Bank problem to see if this spirals. All right, guys, 390 right now, 390. We're right at 390. Deutsche Bank just broke lows at 850 here. This is bad for banking. It'll drag the rest of banking down as well as the market right now. So let's watch to see what happens. SPY at 389.80s here, 389.80s here, and it's not looking strong. I'll put it that way. Yeah, I mean, listen, when you look this good, it's hard not to be confident. You know what I mean? Like when you look this good, it's hard not to be, you know? Everybody's always like, John, you know, you're so handsome, you know, you're such a good trader. You're so humble, John, you know, you're the greatest trader of all time, John. How do you do it? I say, I don't know. You know, I was just born like this, you know, it flows through me, you know, humility just flows through me like lightning. Okay. I can't help it. It's just how I am. You know what I mean? Anyways, the SPY bouncing back up a little bit. It's at 390 right now. Yeah, I'm oozing with humbleness, you know, humility, oozing with that humility, you know. Oozing with the humility of 1,000 bolts of lightning, you know. SPY up to 390, bouncing right back here. Let's see if Deutsche bounces back. That'll be the interesting dynamic. Let's see if Deutsche moves. We'll see. Musk throwing shots at Gates. All right, SPY all the way back up to 390.50s here. Let's watch here. Deutsche did bounce back, so it did kind of test this low and then bounce back a little bit now. Yeah, it's one of the most beautiful, successful, hilarious, humble, intelligent, good-looking traders of all time. I just try to remain humble, whenever I can. Do you think Nasdaq will stay? Yeah, I don't know, man. I think I think watch Deutsche, and then I'd peep over on FRC if you want to see the effects of the banking stuff going on right now. Here's Deutsche. You can find it. There's a New York Stock Exchange listed Deutsche. It is DB. David Bravo is the symbol. DB. David Bravo is the symbol, and it is at 865. So it cracked lows, but then it just rebounded right back here. So the SPY is essentially putting in a triple bottom at 390 right now. Yeah, options are never available for pre-market. All right, guys. So the SPY testing that 390 low again. If we bounce here, it'll be a quadruple bottom. I tend to think we might actually crack it this time, though. So I tend to think we might actually crack this low at this point in time. It's the third time we've tested it, but maybe not, obviously. Starting to pop back up. Yeah, you can trade NASDAQ futures on Top Step. Again, if you want to check it out, you can get 20% off at the link in the description. But yeah, you can trade it. So Do Kwon was arrested with a fake ID, including passports to Costa Rica, Belgium, as well as Hawaii's driver's license. A lot of people are posting this. It's the McLovin driver's license. Look at this, McLovin. I just watched Superbad yesterday too, but hilarious, absolutely hilarious. Hey, nice, Tristan. Hey, congrats, dude. I saw some guy posted social media. He's having an $80,000 unrealized loss in FRC. He bought it at 35 a share. Yeah, I mean, why? I mean, I understand the dip, but he's going way too hard into a bank stock like this. Like, that's way too big a size for me personally. I think that's just inherently risky. Durable good orders is what the the data is today. But yeah, I mean, so he basically bought this thing, and I get that. Like, listen, I get the trade, but I think when you're trading stuff that has this scary of a chart, like when you're trading something that is this scary, you know what I mean? Like, man, my question marks are looking like doo doo. Uh, there we go. When you're trading something that looks this scary, I think that you have to take the approach like I do, which is like I will buy these pullbacks like this, right? But I will start it with small size. And then if we continue dipping, I'll slowly add to it and scale up to large size. I'm not going to just take a huge position at one time right here and then hope for a bounce, because if we don't bounce, you lose, a house basically. Um, and so I think if you're going to take it, like what I'll do is I'll take like, okay, it's down to 40. I'll buy a small share size. Up and dip down to 30. I'll add a little bit more. Up and dip down to 20. I'll add a little bit more. Up and dip down to 10. I'll add a little more. But after a certain point, I got to stop doing that though. Like at a certain point, I got to stop buying this up. So I just think it's like I said, I think if you're going to start taking positions based off big pullbacks like I do, you got to scale into them. Most of my swing trades I scale into. I don't take huge positions right off the get-go. I never do. I almost never do that because I don't think that's necessarily the smartest move. And I think your boy's finding that out pretty quickly. SPY dipped under 390s. And again, I thought, remember me saying, I didn't think this one was going to hold. I think we're going to crack under it now. I might short it. I could short it. The only reason I'm not shorting it yet is because Deutsche actually bounced back a little bit. The other risk of FRC is that FRC gets halted and doesn't resume, i.e. Silicon Valley Bank. That's the other risk there, is that it gets halted and it just doesn't come back. Maybe a buyout happens and investors lose everything. I think if Silicon Valley Bank set the precedent here, I think we should be worried holding bank stocks. And that's the other reason. Like, regardless of what edge you get in these bank companies, I think that if Silicon Valley Bank set that precedent, set that standard of like, yo, look, you might lose everything you invest into it, like everybody in Silicon Valley Bank did. And so regardless of how big I think the edge is there, I think that even if there's a small chance that the stock gets halted and doesn't resume and I lose all the money I invested into it, I think it's an incredibly risky decision to bet on these small banks. Now, again, if I put money in them, I'm not going to put money in the small ones. I'm going to put money in JP Morgan, Chase, Wells Fargo, Citigroup, Bank of America. Those are the ones that I'm going to take. I'm not going to put money into freaking, I'm not going to put money into freaking First Republic or, any of these banks because it's just too risky. It's just simply too risky. All right, so we did get a big pop back. Look at Deutsche Bank all the way back to 880s right now. 880s bounce back here. So again, I just don't know if I trust any of this stuff. All right, so a little pop back, spy back at 390s here. Again, we did add a little bit to our Disney trade, just a little bit. Uh, yeah, Deutsche Bank is the big issue this morning. That's what's dragging everything else down. You can see DB right there. It's back up to 880s though, so it's been bouncing back, some this morning. How's Ford doing, man? Ford was another one I was thinking about buying. And I might start adding on a pullback to Ford, but Ford also tends to move big percentages. See, I'm looking at, I don't see. The Deutsche News, man. I'm going to have to write up my own Deutsche Bank. Deutsche. All right, so yeah, we're going to put this news up on the screen so you can see what's going on. This is basically what's happening. Yeah, we got the news up right here. We had to look it up. Yeah, it's credit to swap problems again. All right, guys. So now we're in basically a quadruple bottom here. Basically a quadruple bottom in this. So. All right, guys. All right, guys. SPY's still right around 390. Looks like it wants to hold here. Oh, we're actually a little green on our Disney trade. That's nice. Yeah, for sure, Pawn. I found it, man. I appreciate it, though. We got it right up on the bottom of the screen. So basically, they're down after a spike in the cost of insuring against its credit default swaps, which is what happened in 2008. Remember, if you don't remember what 2008, let me give you a breakdown of what happened. Okay, so in 2000, in the early 2000s, banking was very loose with regards to giving out mortgages. Like they used to give out tons of mortgages, and little banks would do this a lot, especially the big banks would too. But they would give out tons of mortgages very loosely, specifically adjustable rate mortgages. And if you don't understand what adjustable rate mortgages is, what happens with these is that you might get good terms for the first, say, couple years of your mortgage. But as the market changes, you might have to pay higher and higher rates throughout the life of that mortgage. So what happens is that the mortgages are easy to pay for in the beginning, but once the rate goes up, a lot of people couldn't afford them. But the banks didn't care at the time because, they would give out these mortgages, and the government, Fannie Mae, Freddie Mac would come along and buy up the mortgages within a week, and they wouldn't have to sit on the risk regardless. And so this created somewhat of a conflict of interest because banks could give out these mortgages, profit from them, and then the government would come along and buy them up before they would fail. And so they could basically just give out as many mortgages as they want to whomever they wanted to. And that created a problem, a bubble in mortgages. And that's actually what Michael Burry saw originally when he was in in the early 2000s, this is what Michael Burry called. This was the big thing that made Burry famous. If you want to know why Michael Burry is famous, Michael Burry identified risk for the banks. They identified risk for the banks. They identified uh, he identified the banking risks because of these mortgages. He assumed that the mortgages would eventually fail, that people would default on their mortgages, and that would start a trickle effect that would hurt the entire market and drag the economy down into a crash. And that is precisely what eventually happened. Burry took some very large short positions at the time that weren't even like, he kind of invented his own short mortgage short with a bunch of banks, Deutsche included, Credit Suisse included. And he made billions of dollars shorting mortgages essentially in the early 2000s. They would also package these mortgages in what's called credit default swaps, CDSs. They called them tranches. And basically they would take a bunch of mortgages and they would pack it into one tradable package, and then they would sell those to investors under the guise of, hey, so yeah, that is what happened in 2008. And so, a little bit of deja vu. All right, guys. Sorry, I'm talking to YouTube. Let me see if there's a way I can mute this chat because this is very loud. We might also have to, if there's no way for me to mute, I might have to pause the music for a split second while I'm dealing with them. Uh, but yeah, essentially, mortgages were the blame for the 2008 financial crisis, and again, it mostly boiled down to banks. There were three root causes of the market crash in '08. There were three root causes. Okay, number one, banks were giving out very risky mortgages to people who frankly could not afford the mortgages, which also entailed they were giving out way too many adjustable rate mortgages, which were they're kind of ripping people off, understanding that when they raised the rates, when the mortgage had the rates raised later on down the line of that mortgage, that a lot of the people they were giving it to were not going to be able to afford them and were going to ultimately default on those mortgages. That was the first one. Banks greedy, basically. Banks greedy mortgages. Uh, that's the first problem. The second problem was that investors were buying and selling these mortgage packages very, very loosely and very riskily. The banks and investors and the investment banks were trading these MBSs, these mortgage-backed securities, is what they were called. Very loosely, very riskily. They would acquire them, and they were making a lot of money for years and years and years, knowing what they were doing. They were making a lot of money. They were making a lot of money for years and years and years leading up to this, and they were living life. They were loving it. They were making tons of money doing it. And so leading up to this, uh, and so eventually, they kind of had to pay for it. And that's essentially what happened, is that eventually they had to pay for it. Yeah, they were leveraged up beyond what they could essentially handle. All right, guys. Market's basically bouncing back. The FRC looks weak. Deutsche is doing all right. Yeah, we got a crypto channel, a Bitcoin channel that we cover. And so, yeah, what would essentially happen here is that Michael Burry would go take very, very, very large short positions based off of the mortgage sector, and where he was risking tens of millions of dollars. And if you watch the Big Short movie, this is basically what's in the Big Short movie. If you watch that movie, he paid them. It was such a big position that he would have to pay tens of millions of dollars monthly as premiums if the mortgage market went the wrong way against him, which he ended up having to do. And so a lot of his investors into his hedge fund got nervous and wanted to pull the plug, and it caused a lot of problems. Eventually, it was shown that he was correct, and they made billions of dollars in the 2008 financial crisis. Um, and yeah, I still think the mortgage market's still a little tight. I don't think it's the same. Beginner Crypto is the name of our channel. Yeah, I mean, I hold Bitcoin a little bit at least. Um, All right, guys. So yeah, we're getting a little bit of a bounce back. You can see FRC still looking kind of weak at this point. FRC is looking kind of weak. You see FRC at 12 right now. You can see the SPY up to 390.40s. You got Deutsche at 875s. All right, guys. So yeah, we're kind of flat. The again, First Republic looks weak. Um, where's Bullard speaking? I'm looking at that info now. Bullard. Let's see. Today is the 24th. Um, yeah, I don't even see like any schedule for him speaking. And again, it's okay to be bearish, guys. It's okay to be bearish. It's okay to be bullish, right? Just don't be too rigid. It's the best advice I can give you. Just don't be too rigid. You see people universally be bearish. I don't think universally bear is ever really a good thing. I don't think universally bullish is ever necessarily a good thing. Um, so just be careful, guys. We also have FOMC Bullard speaking today. That is true. He's speaking at when is he speaking? He's speaking at 9:30, like right when the market opens. So y'all be careful when the market opens because this might influence everything. Don't forget the agencies that said CDOs, which is collateralized debt obligations, is what they're basically. And again, there were also some fraud going on with regards to the rating system of CDOs and the collateralized debt obligations. And so was essentially what happened is like they would have very risky bundles of mortgages where like they were not super high rated. They were not super high rated. They were obviously risky, but they would take these bundles of mortgages that they deemed too risky and then they would package them together in what's called a collateralized debt obligation or tranches or whatever they called it. I can't remember what they called it. And they would package it together, and then the rating agencies were in cahoots with the banks and the investment banks, and so they would package these really risky mortgages as A plus investments, and then they would sell them to people. Right. So people would hold and banks would hold all these big bundles of these really, really, really risky mortgage you know, securities essentially. And they were A plus rated, and so they thought they were good. They thought they were safe. They thought they were mortgages, and everybody pays their mortgage until they started to fail. And by the time people really noticed that they were risky, it was too late. And it caused a trickle effect. It caused fire sales in some big banks. Like some big banks just unloaded uh, their whole portfolio of these things, which was billions of dollars. And they sold it to a lot of people who then lost more money. A lot of banks went out of business. A lot of people lost money. The market crashed. And that was the '08 financial crisis. And again, I don't know if we're there yet. I don't think we're giving out mortgages in the same way for sure. We're definitely not still giving out mortgages like that. There were some things that changed, but some things stayed the same relative to now and then. So all right, guys, market's bouncing back up a little bit here, just a little bit. All right, SPY bouncing back basically up to 391s. Let's see if we actually hold this spot though. Uh, All right, guys. So yeah, I don't know what to feel. What I will say is that FRC is really starting to dump down. It's at 1180s right now. 1180s. Deutsche Bank having problems. All right, guys. SPY bouncing back. Deutsche Bank bouncing back. It's at 874s. Look at Deutsche back up to 875s. FRC needs to bounce back too. FRC's been weaker than Deutsche and the market right now. So FRC, I think if another bank fails, it's going to be FRC. They've lost a lot of money over the last couple weeks. They are down 90% or more during this whole crisis. And I think if another bank fails, it's going to be. If I had to pick a bank that sparks this, uh, if I had to pick a bank that sparks a crash, it's going to be First Republic. It's the biggest bank that's been in the most trouble. Yeah, I'm not touching FRC at all. How's AMC doing? Let's see, ape season. AMC's at 430s. You know, GameStop still holding some of his gains though. No, JP Morgan's not going to collapse. That's never going to happen. That's never ever going to happen anytime. Not in the next century at least, unless something crazy. But JP Morgan's pretty safe. It's probably the biggest bank in the world, I'm guessing. And so I do not think there's any chance JP Morgan fails. Uh, the Gov will not allow FRC to fail. I hope not. I think that's if we do crash, that's going to be the path to it. You know. All right, look at the SPY back up to 391s. Deutsche back to the 880s. FRC did bounce back a little bit. It's at 12. Deutsche Bank, Shepherd, they're down big after a big spike in the cost of insuring against credit default swaps. I'm not buying Deutsche. I mean, and again, the problem here, the journey of question mark, is like people see me do this with SQ, right? Like a lot of people saw me do this with SQ yesterday. Um, and again, I had a lot of people talking smack to me yesterday. If you guys remember, like I bought this thing. I bought SQ again right here. And I had so many people talking smack. They said it was a hunch. They said it was just a gamble. They said I didn't know what I was talking about. And then within like 20 minutes, it had bounced back pretty big percentages. And I ended up selling here. Uh, but there's a difference between buying SQ and buying banks. The bank sector is inherently more risky than anything else. I didn't even like I said, I buy emotional dips, but if a bank has been falling down for weeks, that's not something I'm going to buy. Like I choose to buy up stuff that has quick and sudden drops. Like SQ dipped yesterday and basically bounced back. Um, but FRC has been falling down for weeks now. Deutsche Bank is another bank stock that you can kind of see is down big over the last 10 days. So there's a difference between buying up banks right now and buying up anything else. And so I just think the risk's a little bit high with banking, and maybe it works. But right, 100% Damien, 100% man. It's because they don't understand. Again, you got a lot of what I call postures in the chat. That a lot of the time they'll eventually get banned because it takes a really kind of specific personality. I'm not going to say it's narcissistic, but it's somebody that really needs validation in the chat, right? So it takes a very specific type of person, which they have their viewpoint and they're too rigid. It's just too rigid, is all it really is, right? And so they don't understand what I'm doing and they haven't seen it. The group thinking is very strong. It's very strong. Yeah. When you used to scalp, what was your favorite stock? AMD for sure. Yeah, we all called it my girlfriend because AMD was just powerful for me to trade. Again, though, I've kind of transitioned. It kind of went from AMD to trading blue chips. Like AMD was my first introduction into blue chips, and AMD is when I first realized that I could scalp larger cap stocks safely and effectively, much more effectively than I ever could penny stocks. Um, so that's kind of what I realized is that AMD was kind of my introduction, and this was years and years ago to me scalping blue chips. You know, I used to call it my baby, is what I called it, because it was so reliable. I would make money on it. Uh, I'm extremely bearish. I think Nasdaq will be at 11K at some point, maybe so. Yeah, for sure. Yeah, I know you've been around for a while, Jessica. I appreciate the support. You know. Yeah, I'm thinking about if I had to buy a bank stock, like I said, I'd probably be JP Morgan. Yeah, and look at SQ all the way back to 61s. All right, guys. So yeah, SQ popping up. Deutsche Bank reversing here. Let's see if this drags the other banks down. Here's the SPY, and yeah, you can kind of see if you want some sympathy price action today. Look at Deutsche. Here's Deutsche. Here's the SPY. You can see a very obvious correlation between price action from Deutsche and price action on the SPY. The SPY was looking pretty strong at 391, and then Deutsche rejected off of the VWAP at 880. This is why you watch the volume weighted average price too. The reason you watch it is because so many other traders are watching it right now. Look at the VWAP test on Deutsche as well there. So 9:30. The music is off today. Hey, my guy Jose. Last year I lost 50K, but since I listened to your show, I made money slowly but surely. The problem I was buying thousands of shares on FOMO of gainers and pre-market. Thanks and have a great weekend. Thank you, my guy Jose. I appreciate that very much, brother. Thank you so much, dude. And again, this is a great lesson, man. This is a perfect lesson for traders. This is what I really try to tell people. Again, no, I don't know who that is. And I would also rather you not promote any other streamers here, brother. Just a request. You know, too many. It's hard for me to vet, and a lot of people are nice, but they're kind of secretly trying to promote themselves. Um, Bro, honestly, I'm getting frustrated. Not you, Sammy. I'm sorry, I'm getting frustrated with the YouTube. Bro, freaking my freaking bank. I'm not gonna say what my bank is, bro, but my bank has been getting deposits from YouTube for a year now. A year. And so when YouTube was supposed to send the deposit, my bank initiated a security threat. And now instead of getting paid by YouTube, which I don't need necessarily need the money, I'm more just kind of frustrated that I have to go through this verification process again on a bank that I've used. Like my bank should see that I get paid by YouTube monthly. Every single month they should see that. But instead they issue a security verification check and then YouTube is slow in sending the verification. And so now I'm just kind of sitting in limbo. But let me see if I can log in here and contact. All right, guys. So again, we're watching the bank weakness unfold. We do have durable good orders in about 45 minutes. About 45 minutes. Uh, yeah, so we got about 30 or 30, 40 minutes until the data comes out. All right, guys, market's testing that low level again. At this point, we've bounced off of that 390 low multiple times. Multiple times. So um all right, guys, look at FRC break lows here. All right, guys, let me see if I can get in touch with. All right, guys, market's testing that low again. FRC broke down. You can kind of see here. All right, SPY at 390s here. FRC trying to bounce a little bit. Yeah, well, the market's flushing right now, I guess. Do you use leverage? Yeah, I got about 160,000 in leverage or so right now on this account, about 160K or so, give or take. But yeah, so again, Jose said, I'm going to put this up again so people can actually see it here. My guy Jose said, let me figure out where he posted this. He said, last year I lost 50K, but since I listened to your show, I slowly made money slowly but surely. The problem was I was buying thousands of shares on FOMO of gainers and pre-market. Thanks. Have a great weekend. This is an incredibly important aspect of trading to understand. Which is that, like, listen, man, if you're a new trader, if this is your problem, listen up. Okay. There's a lot of traders, and thank you so much, Jose. I appreciate that, my guy. Thank you, man. But here's the problem a lot of traders face, right? So this is what happens to a lot of traders. A lot of traders, like especially with like penny stocks, this is where it really happens the most is penny stocks. Um, this is where it happens the most with penny stocks, right? Is that traders, and it happens on both penny stocks and any stock or security really. But what happens is that traders see but this is what happens is that you got a stock, maybe it's a penny stock, maybe it's a blue chip that gaps up on some news, it gaps up on some strength. Uh, uh, it gaps up on some strength, right? So say this the penny stock gaps up, it looks really strong. Say maybe the penny stock had some good news on it or whatever it is. Um, and so the stock gaps up. Oh my gosh, dude, I gotta get these notifications going away. They're so loud. There we go. Um, there we go. All right, so I can put the music back on now. But yeah, the problem is like you get one of these stocks that gap up, and traders, like experienced traders, are gonna look at like say you got a penny stock that gaps up 20%. And it has some good news or whatever it is. Experienced traders are going to look at that 20% gap up and they're going to be like, yo, this is extended on the upside. Like, I'm not buying this right now. It's too high. It's too expensive. Like, there's too much upward extension. There's too much downward pressure now because what happens when a stock bounces up 20%? What happens when a stock gaps up 20%? People take profit. Traders that rode that 20% ride up, they start unloading at the opening bell. They start selling. You know, high of the day breakouts simply do not work most of the time. If you want to look low of the day breakouts as well, if you want to see this, if you were trying to buy this low of the day breakout on the SPY, you would have gotten faked out already, what, 5 times? Like, look, same thing here. So if you're trying to buy that up, you're going to get faked out very quickly, very quickly. And so the problem is that like experienced traders understand extension more than new traders do. Not even new traders, but more than some traders. You got some traders that just keep trading the same way and they refuse to change. Even though what they're doing is not working, they're losing money, but they learn a specific strategy and then they only trade that strategy. Even though the strategy might not even work. You buy high of the day breakouts, a lot of the time high of the day breakouts and low of the day breakouts breakdowns, a lot of the time that's the only strategy that a new trader has in their head. That's the only sign of strength or weakness that a new trader knows. And so they're just getting faked out left and right, losing money. Same thing with yesterday on FRC, or not on FRC. Same thing with SQ yesterday on the downside. Like what happened? We had a bad catalyst that came out for this one. You had a bad catalyst that came out here, right? And so a lot of new traders might look at this down here and say, oh, it's super weak. It had this bad catalyst come out for it. The Hindenburg put out the short report. It's super weak. I'm going to short this now at the lows. The problem is that you short it at the lows, you're getting faked out on a huge bounce. Why? Is because experienced traders understand extension. Experienced traders are not shorting low of the day shorts on a stock that is down 20 something percent in 10, 15 minutes. That's just not what experienced traders, most of them, are doing. And so you can try to piggyback off of momentum, but you need to understand when something's down big, the momentum switches to the other side. That's the biggest mistake. Gap fills are a real thing. Like the big thing to understand is that people take profit. Like people who rode this short down, people who rode Hindenburg probably shorted this and then started covering down here. So what happens when shorts cover? They buy it back. Stocks bounce. And so understand extension. It's a real thing. Like just because something has good news does not mean it's going to continue going up forever. Just because something has bad news does not mean it's going to continue going down forever. Understand the contrarian nature of the market, understand extension, and understand emotion is really what this is. This is just psychology. This is saying, hey, everybody's down. Eventually this thing's going to start squeezing some of the shorts that got greedy at the bottom. And so that's the biggest thing to understand. If you can understand that one simple concept of extension, the market gets a lot easier. It really does. The market gets a lot easier. You want to know why everybody's so emotional? Is because they're refusing to look at extension. And honestly, I love catching falling knives. Like they say, don't catch a falling knife. That's one of the most ridiculous, you know, cliched sayings in the market. To be honest, it's a lot easier to catch a falling knife than it is to try to ride down a 30% extended stock already. And so in that regard, look for objective value. That's what I look for. I usually only long. I don't really short at the top, but I'll long at the bottom for sure. And I just look for objective value. If Amazon's down 20% short term, there's probably some value in buying that dip. If SQ, a fairly large company, has dropped all the way from 75 to 50, it might be time to buy the dip. Again, I'm not telling you to do anything. I have no idea what anything's going to do, but understanding that simple part of the market can help you a lot. It really can. It can help you a lot because you're always going to have emotional traders who are trying to piggyback off of the worst levels. But if you look at my accuracy with these trades, you'll start to understand the pattern that I'm using, which is just emotion. I look for overreactions. And I certainly think SQ is one. I think if you look at yesterday's price action after the bell, look at how much this thing bounced back after that. I didn't even take advantage of this. I got out right around here because it bounced back so fast that I was able to cut it pretty quickly there. But it eventually bounced all the way back to $66. So it bounced from 55 to 66, $11 a share bounce at the open yesterday for SQ. And so again, you can try I'm not saying you can't make money piggybacking off of momentum. What I'm saying though is that I think the probabilities are low, Well, yeah, you're never going to get the perfect entry. I mean, sometimes you can, but sometimes you're not going to. But there's always examples of stocks that don't have anything to do with this. There's certain examples of stocks like banking right now is different. Why is banking different? Well, because banking right now, there's risks of there's vulnerabilities holding long term because of the contagion spreading. So banks are a little bit different right now. It's not going to universally be true. There's going to be some sectors and some stocks where this doesn't necessarily mean anything yet. Specifically, penny stocks is a great example of this. Penny stocks are almost never extended on the downside. And so if you use the same thought process I just had with penny stocks on the downside, you're trying to buy up a penny stock that's down 70%, you're probably in for a pretty rude awakening because penny stocks are terrible companies and they will continue falling down inevitably until they will continue falling down until they get delisted and go to the pink sheets. And then a lot of the time, the penny stocks will keep dropping until they're just failed as a company and investors lose everything. And so bag holding and averaging into penny stocks on drops is not a good strategy. It will fail. It will destroy your accounts. It'll turn you into a long-term bag holder. Before you know it, you'll be making a fanboy channel about some obscure penny stock that a bunch of other people are down on. I've seen a lot of people try to day trade penny stocks with the same logic, and then they turn into fanboys. They start these fan pages of stocks. They form these communities around, hundreds of bag holders in these penny stocks that are just terrible companies. These are just horrible companies. It's honestly kind of funny, to be honest. You look at traders that are really pumping up. They form these communities around terrible companies, and the stock just keeps on dropping. But for some reason, they say that, it's still okay. Be careful of those groups too. Because again, they're just emotional because they're stuck in positions of losing penny stocks. You see that a lot as well. Just be careful. The ES is so. Can you please explain how the ES correlates with the SPY? Well, no, the ES is not going to move in opposite directions of the SPY. Toronto. If you look at the ES is literally the SPY. Look, it's literally the same price action. The SPY is an S&P 500 ETF. The E-mini is the S&P 500. The only difference is that it moves in pre-market as well, where the S&P 500 is closed in pre-market. That's the only difference. Aside from that, it's the same price action. You can look at it over the last, look here. Easiest way to show you this is just to zoom in. Look, 2 red candles, three green. Now there's a slight delay in the E-mini, but look, 2 green candles, 2 red, 2 green. 2 green candles, 2 red, 2 green. 3 green now, 3 green. So again, it's not going to be exact because what the futures market is the futures market was originally created by farmers who wanted to lock in prices of their crops because they would grow crops, and then by the time they came to yield those crops, the prices of the crops would change so much, hurt their margins, and they wouldn't be profitable. And so what they started to do was sell futures contracts, which were basically investors and traders speculating on the future price of a commodity. So they would lock in the price and then they would sell it to investors who speculated on it. So in that regard, futures just means you're trading the future price of a commodity. But there's also an E-mini, which is the S&P 500 ETF, right? So the E-mini is the S&P 500. But yeah, look, it's the same price action. Look, the only difference is that the futures market has a little bit more liquidity. And so like you can see the SPY's not really moving that much on this candle, and the futures candle might be moving a little bit more. But again, it has to do with liquidity. The futures market actually has more liquidity than pre-market in stocks. But that's the only difference. Aside from that, it's exactly the same price action and movement. I don't really want anybody to copy me. Yeah, thanks, Pawn. Yeah, Bard. Let's not promote other channels here, brother. John, one thing I've noticed, please don't spam that comment as well. Yeah, I don't really want you to copy me. Yeah, I trade fast in pre-market because I think it's necessary to do so. And again, if you want to trade futures, guys, if you want to try out futures, again, here's the E-mini in the middle. Here's the SPY on the left. You can trade this middle one here, which is essentially the SPY. You can see the price action. It's the same thing. 2 green or 2 red, 3 green, 2 red, 2 red, 3 green, 2 red. You can trade this middle one here in futures with no PDT rule. And Top Step is the single most legit futures funded program in the world. What they do is they give you a demo. If you can hit the target on their demo while following their rules, they fund you between $50,000 up to $150K with a 90% split. I think most people are going to lose the challenge, but it's just a cheaper barrier of entry where if you're good enough, you can pass it and get funded. If you're not good enough, you're going to lose a lot less money doing this than putting up the money yourself in futures. And there's no PDT in futures. So it's just a lot cheaper. You know, it's a lot cheaper, frankly, to lose a Top Step account, still test yourself, than to lose a regular account testing yourself. Because again, if you're good enough, you can still get funded, keep 90% of your profit. If you're not good enough, you're going to lose much less. And so it's an easier way to enter the market. And if you want to check it out, you can get 20% off. They are a sponsor of mine. I'm certainly biased in their favor, but check them out here. It's a little bit more volatile. It mostly just has to do with liquidity, though. It's the same price action. It's just what I'll say is like if you're trying to trade the regular E-mini, it's essentially like having 1,000 shares of the SPY. Okay, it's actually like having 1,250 shares. Every tick up or down on the E-mini is $12.50 in profit or losses, right? And so if it goes against you 4 ticks, which happens very quickly, you're down $50. You know, and so in that regard, just you could trade the micro E-mini, which is MES. You know, right now it's MES M3. I think is what the current contract is, and that's going to be $1.25 per tick, right? So you could take 5 contracts of the micro and have smaller size than 1 contract of the regular, and that's what I recommend you do if you are learning to trade the markets like this. Yeah, hit the like button. Hey, thanks, EHOP. Let's not spam it, though. I appreciate everybody telling to hit the like button. Just please don't spam it, brother. All right, guys. FRC. I'm also looking at Deutsche. Here's Deutsche. Still sitting down there. I gotta put my eye drops in. See, the eye doctor gave me these prednisone eye drops again. I'm gonna have to stick them in. Hold on. $9:30. Bullard speaks at 9:30. I'm not crying. I just put eye drops in, guys. All right. All right, guys. Market is breaking lows down here. Not a big low break, but somewhat of a low break at this point in time. I love you. Have a good day at school, guys. I love you, bud. Huh? You're wearing my Nike slides, bro. You can't wear them today, unless you can wear them if you can, but they don't fit, bro. They're too big, man. Yeah. All right. All right, love you. How you doing, man? Your eyes doing all right? Hey, don't mess with that, bro. Hey, this is the background of my stream, dude. All right. Yeah, then it should be here. I love you, buddy. Look, if you want to see where it's at. Look. Yeah. So you can kind of see it right there next to the fire. But all right, buddy. I love you, man.
Wait.
What?
I want to see it.
See what?
Well, you're in the way.
Here, buddy. Just don't go anywhere near those cords, man. I'm serious. Okay. Look. There it is right there. See? All right, bud. I love you, buddy. I love you. Have a good day. I'll see you guys later, all right? Durable goods, they're not going to have too much impact on stuff. They'll move the market a little bit, though. Bro, my bank literally does not have a chat line. They don't have a chat? They can't add a chat? All right, guys. Market bounced back a little bit. It's at 389.60s here. Again, watch Deutsche at the left, SPY in the middle, FRC on the right. Got about 20 minutes before the durable good orders numbers come out. Always, man. I don't know if PMI's today. We got durable good orders. Yeah. We got England PMI, which is already out, and then we got core durable good orders and Canadian retail sales, and then Bullard speaking. We got manufacturing PMI at 945, services PMI at 945 as well. So you have manufacturing and services PMI dropping, but. Hey, nice, Byron. Hey, thanks, brother. I appreciate it, man. Yeah, my daughter's 13, dude. She's just getting old, man. You know? All right, market bounced back a little bit, almost back up to 390. I have no idea, Raphael, if the market's going to go back up or not. Yeah, Butler speaks at 9:30. But yeah, I have no idea if the market's going to pop back up. I really genuinely don't know. All right, guys. So yeah, we'll see if the market continues to pop back up. All right, guys. SPY back up to 390, rebounded all the way back. Deutsche hasn't moved much. First Republic is back up to 1190s here. My son's 8. All right, guys. SPY back up to 390s. Let's see if it bounces. $390s on the SPY. SPY back up to 390. Deutsche back up to 860s. First Republic back up to 12s here. We can look at Tesla too. There's Deutsche on the left. Tesla down to 190s. You look very young. It's almost unbelievable. You have 2 kids. Hey, listen, man, just good genes over here. Good genes. Honestly, I hated looking young all my life. If you saw me in person, I'd probably look a little bit older. So if you saw me in person, I'd probably look a little bit older. You know, I think the screen hides some of my wrinkles, if I'm being honest. You know, but I appreciate it, bro. I appreciate it. I looked young all my life, and when you're 18, you don't want to look young. You want to look old. You know. But most of the people that looked really old when they were 18 are now looking, you know, much older than they are. And but honestly, at this point, I'm just glad I have hair, you know, to be honest. Like a lot of my friends that are my age lost their hair at this point in time. I'm at the age now where it starts to go, you know, so I'm just glad I got hair at this point in time. You know, they say it comes from your mom's dad. You know, my mom's dad was bald at 25. So I'm just glad I have hair at this point. You know, top 3 greatest hairs ever on my head. But definitely top 3. But yeah. Yeah, I'm not going to tell exactly how old I am. I'm over 30. I'll put it that way. SPY up to 390s here. 390s. I got a little pullback on the SPY here. Let's see if we hold. 390 is a big level, so we're kind of pulling right back to 390. There's Tesla as well. We'll see if that holds. Yeah. Yeah, I like my 30s. I mean, I'm married. I got kids. My life's good, for the most part. I'm happy. No gray on my hair yet. But I'm sure that's coming sometime over the next couple years, to be honest. But no gray hair yet. You look 31. I'm older than 31. Yeah, make your best out of your 20s, bro. Your 20s go quick, man. But honestly, you learn a lot in your 20s. Like when I was young and dumb, I was really dumb from when I was like 18 to I would say at least like 23. I met Carol when she was 19. So Carol and I got together when she was 19. And I was 22, 21. Something. I'm only a couple years older than Carol. But yeah, I was really dumb in my 20s. I had some fun though, and I look back on my 20s and I can laugh at a lot of the stuff I did. And so, I had my fun. I definitely can't say I didn't have fun in my younger years, But at this point in time, I'm getting older, and you kind of learn to laugh at your younger self. You know what I mean? Market pulling back under 390s here, so we're right at 389.50s. Right at 389.50s. Yeah, y'all can keep guessing. I'm not going to tell you exactly how old I am. I'm also not going to. I'll tell you that's wrong. Bar, I am not that old. But that's all y'all are getting. I'm not going to give you any more. Jay, I've never seen you say anything here before, so we don't care about what you want to do. To be honest, man, So cheers to you, bro. Stop complaining. Stop crying, bro. I guess is the point I'm trying to make. I'll talk about whatever I want here, and then if you get weird about it, I'll just ban you. Nope, that's not right either, Mike. Hey, congrats, Unique. That's great, man. I always think it's funny. Like, okay, listen, I'm here for 4 hours of the day, sometimes longer than that. We talk about the market a large majority of that point in time, right? And so I always find it funny. It's like if we stop talking about the market for 5 minutes, you always got some people who have never said anything before. They never say anything, like they never contribute or say anything productive. All of a sudden come out and being like, bro, we don't want to hear about this. Like, bro, what do y'all expect me to only talk about the market for 4 hours straight? Of course not. Y'all, I'm spending 4 hours of my time here, talking about mostly the stock market. But yeah, y'all better believe you're going to hear other stuff. You're going to hear about my life. Y'all are going to hear me talk about all this other stuff too. And if you don't like it, go watch somebody else. It's all good, But it's not a reasonable expectation to expect me to only talk about stocks 24/7. It just doesn't make sense, Okay, I appreciate it, Jay. Thank you, brother. Okay. Sorry, man. Like I said, context is hard to tell through text. I appreciate it, Jay. Thank you. It's hard to tell context sometimes. And I'm probably a little bit brash with my reactions to it because, frankly, I'm conditioned at this point to react that way. But I appreciate you clarifying, and it's all good, brother. It's all love here, man. I appreciate you taking my comments with understanding, Bruce, Big Papa. Bruce is freaking huge, man. Market bouncing back up. It's at 389.75. We do have durable good orders coming out. If you don't know what durable good orders are, durable good orders are just to give you the actual textbook definition, they measure the change in the total value of new orders for long-lasting manufacturing goods, excluding transportation. Aircraft orders are very volatile, take a number of months to fill, so they don't really include transportation things. The core number gives a better gauge of ordering trends. A higher reading indicates increased manufacturing activity. And so a higher than expected number could signal less recession fears, but more inflation fears. And a lower than expected number could signal the opposite. And we'll have to wait and see. That number drops in about 10 minutes, for durable good orders. And again, as I said, higher is going to mean increased manufacturing activity, which you can figure out how you're on your own what that means for the market. My guess is higher is going to be seen as worse in because of inflation problems. But at the same time, it could be the complete opposite because, again, the market is kind of fearing a recession with the problems in banks right now. And so it could also be something where lower is better and higher is worse. But again, or it could also be something where higher is better and lower is worse. Higher manufacturing activity could be interpreted as positive. Over the last year or so, it hasn't been. But again, that could certainly change because of the bank problems going on right now. So I guess my point is I have no idea how the market's going to react to durable good orders. We're going to cover them as soon as they drop. Expectations on the month are 0.2%. 0.2%. And so higher than 0.2% would mean they're higher than expected, increased manufacturing activity more than expected, and lower than 0.2% would mean the opposite. So again, we got about 9 minutes left. Market's bouncing up. You can see Deutsche bouncing up a little bit as well. And yeah. Show us my teeth. I got pretty good teeth. My teeth are pretty straight. No, I'm not going to comment on my age, Jerome. Like I said, I'm not going to tell you guys how old I am. But I weigh probably about 170, maybe a little bit over 170 right now. Yeah, don't sue me, top 3. All right, guys. Deutsche bouncing back up. SPY still right around 390 here. Right around 390. Still got about 7 minutes. Question, what do you think about Google? I have 104 puts. Do you think they will print? When's the expiry? And I'm going to, number one, I don't know. Don't copy me. Not liable if I'm wrong here. I have no idea. But I'll tell you my my opinion on it. Yeah, but honestly, what I tell you guys, you can't put too much weight on it. No offense, but I like to lie to you guys about small details. I'm never going to tell you the exact age I am. And if I told you a year ago, it probably wasn't my real age. Just because, like, we really do have people try to steal my identity. And so I'd rather give you guys a slightly wrong answer. And then, so that you guys can't, like, try to steal my identity. I guess is the best way to put it. Yeah, obviously I'm 21, dude. Top 3 greatest. They'll influence a little bit. Yeah, Raphael, lower your size, brother. If day trading is causing you sadness, stop day trading. Yeah, my teeth are all right. I've got all my teeth. Definitely top 3 greatest teeth ever right now, for sure. All right, guys, look at Deutsche. Deutsche about to back up to 870s right now ahead of this report. We got 600 people here. Durable good orders are coming out fairly soon. And, yeah, we'll see what happens. Look at Deutsche pop up, SPY popping up. We got about 5 minutes before the durable good orders. All right, guys, 4 minutes. 4 minutes before the durable good orders numbers come out. Let me see what the poll number. I think we did a poll number here. Mostly bearish reaction. We got about 700 votes. 55% are bearish. 45% are bullish. Where'd my hat go? What do you guys think, bro? I got these two hats. They're both kind of tan. This one's kind of a trucker hat, and then this one is the Adidas hat. And I had one like this before. Which one's best? Here's Adidas. My goal is to not look like the Sandlot guy. You know, the Sandlot fish hat. You know, the super long build hat. That's my goal here. And I feel like this Adidas hat might be a little bit too Sandlot-ish to me. You know. So I like the trucker hat a little bit better. There we go. I think that's a little bit better. Top 3 hats in the world right now for sure. All right, look at Deutsche back up to 875, hitting the VWAP here. Let's see if the VWAP holds. What if day trading causes you anger? Would you stop? Probably. Yeah, I'd probably stop. You know. What is it? Yeah, well, Deutsche. DB is Deutsche Bank on the New York Stock Exchange. You can see there's a direct correlation between Deutsche today and the market activity. SPY back over 390s. Yeah, I've never cried about a trade ever in my life. And I've lost some money, you know. Yeah, Activision, Microsoft buyout. I thought they were. Is that still? That must. They must have had some type of news on that one because Activision gapping up big. What's my biggest loss on one specific trade or multiple? All right, guys. So, yeah, look at the SPY dipped out. It's at 390. Let's watch what happens here, guys. We got less than a minute. I'm getting everything ready. Be ready. All right, guys. Be ready here, team. Durable good orders drop in less than a minute. 0.2% is what they're expecting. Over that means increased manufacturing activity. 0.2%. Be ready, team. 10 seconds, or about 15 seconds. Market's moving up ahead of this. All right, guys, here's the data. 0.2% is what's expected. All right, so the durable good orders came in at 0%. 0%, which means lesser manufacturing activity. 0% versus 0.2% expected. 0% versus 0.2% expected, which means that lower manufacturing activity than initially expected here. Again, 0% versus 0.2%. Came in at 0 versus 0.2% for core durable goods. And we'll put this up on screen. 0% versus 0.2% expected. And the market's not really reacted too much, like we said. SPY up to 390s, but it's not bad for markets because of inflation stuff going on. But yeah, I told you guys this is not going to move the market a ton. Maybe we get some follow through from it, but again, a little bit less manufacturing activity is what this means. A little bit lesser manufacturing activity is what this means. And again, already, guys, if you haven't checked out Top Step, if you want to trade some of these big economic releases like we do here, again, here's the SPY in the middle, and you can't day trade the SPY unless you have $25,000. The E-mini does the exact same thing, but you can day trade this. So it's one of the kind of loopholes getting around the PDT rule. You can day trade this left one here with no PDT restrictions, which is essentially the S&P 500, the SPY. Canadian retail sales came out as well, higher than expected for retail sales for Canada. Came in at 0.9% versus 0.6% for core retail sales for Canada. But yeah, if you want to day trade, try out the futures market. There's no PDT in futures. Top Step is the most legit funded program in futures, where it's the easiest barrier of entry in the futures market. What they do is they give you a demo and they test your profitability. So the base one's 50K. They give you a 50K demo. If you can hit their target and pass both phases, so if you can hit 3K in profit while following their rules without hitting their max loss and pass both phases, then they fund you 50 grand legitimately with a 90% split, and they pay out millions of dollars to their funded traders in actual withdrawals every year. They fund thousands of traders a year. It's just the easiest way to get started, and the point is that it's a lot cheaper to lose a Top Step account than it is to put up the money yourself and risk that. But you get to keep 90% of your profit, so the reward's basically the same almost. You only lose 10%, but the risk is much less, and it's still a great way to test your skill. And so it really is a beautiful thing. It's something that I wish I had in the beginning because I would have lost so much less money, and I of course would still probably lose the funded program challenge. But it's cheaper to lose the challenge. The base one's $140 or roughly that. If you use my link, you get 20% off. And so it's a great way to help support the channel. They are a sponsor of mine, and so I'm biased in their favor, certainly, because they pay me money. But I really do think it's useful for traders. And if you want to check it out, here is the link. Great way to help support the channel. Yeah, we can look at the Bitcoin chart. Bitcoin actually liking this. Or no, Bitcoin dipping down a little bit. Over 28K is still a positive sign for Bitcoin, though. We do have PMI data coming out at 9:45, so we got S&P Global Composite and Services PMI dropping as well. All right, guys. I didn't love this. It's actually pulling down. Go ahead and copy and trade this. Manufacturing PMI. All right, guys, market is not really loving this. All right, guys, so markets bounce up. Very choppy market. Also had Express numbers come out. Yeah, so we got manufacturing and services PMI dropping. Starting to bounce up a little bit though. What else we got? All right, guys, look at the SPY rip up. Maybe a little bit of a delayed response all the way back up to 390 plus. Well, Kyle, so it has to do with how much the percentages of manufacture, how much the percentage of those orders are going up or down over time, not the overall volume of those orders. So it's not like there were just no durable good orders. It's basically saying that there's no change in the amount of durable good orders from this month to from last month to this month, or there's no change from this is actually the data from. Let me make sure. Yeah, so this is the data from February. So what this means is that there was no difference in the durable good orders from January to February. So it's not the total volume number. It's actually instead the percentage increase or decrease relative to the previous month, which would have been from January to February. So there was no change in the durable good orders from January to February. Basically, when they expected a 0.2% increase, they were expecting a 0.2% uptick in the orders relative from January to February. All right, but SPY bounced it up a little bit. SPY moved it up a little bit though. All right, so again, just kind of sitting back waiting here. Yeah, market's super chop right now. I haven't taken any trades. A lot of the time, if there's big like momentum directions, I'll take trades, but the market is essentially just this. You know, that's pretty boring market right now. All right, I'll be right back. I gotta go grab my other eye drops. I'll be right back. All right, we're back. But yeah, so market popping up and down, very sideways. The only way to really trade this today is is to trade the range. All right, we're gonna do another question: bullish or bearish on today's PMI data? Oh, I've been drinking coffee, bro. Dude, I get up at 5:15 in the morning, dude. So you better believe I'm drinking coffee. Uh, all right, guys. So how are NFTs doing right now? I got some Top Shot NFTs. All right, guys. So we get another quick bounce. Very, basically, very choppy. Yeah. I mean, 390 is probably the level I'm looking at to hold. We got about 45 minutes until the market opens. Back up to the VWAP here. The VWAP's been a pretty strong level. Like, look at this. We are testing this level multiple times, pulling back up to it, rejecting, bouncing if we're over it sometimes. Spy about to pop? I hope so. No, my Combine account, I'm just kind of slow on. Again, my TOS account's got like 160,000 in buying power, so a lot of the time I'll trade that, but it just varies. It's one of those things that I don't necessarily need to get funded. And so, like, I'm trying to get funded, of course, but I'm taking it slow and steady because I can, you know. And I understand that not everybody's in that situation, but, you know. Deutsche does not own the S&P 5 or the New York Stock Exchange. They are listed on the next S&P Stock Exchange. All right, guys, spot back at 390 again. We talked about 390. Again, back up to 390s. Market's so slow right now. We do have PMI data. And again, so durable good orders is kind of like a small look into what is going on with regards to manufacturing. But the PMI data later today will be a little bit closer look at that. Can you explain how PMI impacts the SPY? So it's just manufacturing. It'll impact it some, but we'll have to see how much it does. Again, it varies. How much it impacts it each day to day varies. So yeah. Hey guys, I got a question here, right? So I'm just now seeing this dude who I banned a couple days ago, who's actually been a member of the stream from a long time. right? I see this big long message he sent me basically defending his points. And he seems to be super distraught over me banning him. And so part of me is like, well, maybe I should send this dude a message back. I'm not going to unban him. But like, okay. Basically, he says he feels like he lost a family member in me banning him, right? But the problem is, and what I'm basically telling him here is that, number one, it's almost certainly you have been banned before. I say this is what I wrote out, right? And y'all can, again, I'll let the chat tell me whether I think this is reasonable or not. What sparked me banning this guy was that, number one, he's been here for a while, but over the last 6 months, I've thought about banning him a couple times because it's just kind of like he's obviously just waiting to disagree with me. Like it's normal to disagree on some points, right? But when you're disagreeing with everything I say constantly, and I have to constantly defend basic points that are obvious, it just gets to be work. It just gets to be work, right? And so, some examples of this were being a teacher isn't hard. Teachers get paid too much is what he said, right? When I said, hey, my mom was a teacher and it's a tough job and they don't get paid very much, which is obviously true, right? Now, maybe you could find some outliers to that statement, but in a generalized way, it's very true, right? Teaching's hard, and you try it. If you've never done it, you don't understand how hard it is. Again, I've never been a teacher, but my mom was a teacher, bro. Trying to keep 30 kids, teenagers sometimes, to pay attention, very difficult job. But he said, oh, being teacher, it's not a hard job and they get paid too much. He said, what was the other examples? He said, I said, buying a new car, generally financing a new car is one of the worst things you could do. It's one of the worst investments young people can make is financing a new car. Because you're locking yourself into debt for a depreciating asset. Again, another thing that's obviously true. Anyways, he just kind of, then he said AI was just a buzzword and it was too much hype. My response to that was software developers understand how productive you can be with AI. And his next follow-up was insulting me as a programmer. You know what I mean? So it's like obvious things just sitting around, but he's been here for so long that I feel kind of bad about banning him. So I don't know whether I should just leave it alone and like not say anything. And he might be here right now. But I don't know whether I should just leave him alone and just not even respond to the message, or whether I should just be like, look, you're obviously just sitting around waiting to criticize. I just feel bad. He's acted like he lost a family member here. So he seems distraught. And so it's just kind of like, what do I do in this situation? Unban him and then instantly ban him again. Yeah. Yeah, he just wants to argue 100%. And he's like, John, I've watched you every day for years. And I'm like, this is what I said to him. This is what I said. This is what I'll probably send him this message. Number one is that you are almost someone who has been banned before. You also know how antagonistic you are. Of course, there is no reason for me to tolerate constant disagreeings on things that are very obvious. You have known I'm a programmer for a long time. And so you acting like you just found out, constant button pushing is not reasonable. You acting like you just found out to justify your toxic constant button pushing is not reasonable. We could disagree about AI without you needing to put me and my programming skills down, discount my mom's work, etc. In the end, you're just not worth the time, regardless of how long you've been here. And this was the last straw, not the first time I've considered it. I don't feel like needing to constantly defend every point I make with someone that just sits around waiting to disagree to push buttons, which is obviously what you're doing. I do look at a lot of subs like as family as well, of course. I look at a lot of you guys like family because y'all are here every day. But you over the last few months have constantly disagreed with almost everything I say. That's not how you treat family. That is toxic to the community I have built. And in that way, I need to be swift and decisive. You can claim that these things are how you really feel and all that, but the odds of that are very low. The odds in favor of you just disagreeing to frustrate me are much higher. I hope you understand. No hard feelings. Like I said, I don't want this dude to do anything brash. Just, it is clear you took some things I said in the past personally, and so in turn started to act out in a childish way. My guess is you have been banned before on a different username. You will deny it, of course, but still, good luck with life. Should I send him that message? Chat, should we do a poll? Should we get the gladiator, thing out? Whether I should unban this guy? Maybe we should make it a public spectacle. SPY rip it back up over the volume weighted average price and over the VWAP here. Look at the SPY rip. Deutsche Bank. Let's see what Deutsche Bank's doing. Bitcoin's not really moving though. But here's DB. Deutsche Bank ripping back up as well. Let me see if a catalyst came out for this. Yeah, I don't see any catalysts. ECB's Lagarde told EU leaders that the easy banking sector is resilient because it has strong capital and liquidity positions. Maybe that's making the market bounce back, but I don't think so. Yeah, for sure. I agree with you. You don't act like a childish headache. 100%, man. 100%. And that's exactly what it is. It's clear. I've been here for years. Cal, you're good though, bro. Like I said, people can disagree. Look at the market, man. Flying back up here. Flying back up. People can disagree, but you better not only disagree. If you only disagree, then that's when you're at risk of getting banned. But if you're a productive member of the community most of the time, and then sometimes you disagree with me on certain subjects, that's all good and fine. Like, that's fine. You know what I mean? Like, that's all good. Like, that happens. Like, we're always going to disagree on things, and it's all good. I don't want to discourage disagreements, but like, if you've been here for 6 months and literally every point I ever make you're disagreeing with me on, then it's like, all right, bro. Well, like, at a certain point, I'm going to essentially start ignoring you is what I'm going to do. Anybody here, if you act that way, I'm just going to start ignoring you. And then eventually you might get banned because it's just not worth it. But yeah, so again, durable good orders came in at 0, which means that the change from January to February was nothing. There was no change from January to February. They expected 0.2% increase. So what this ultimately means is that from January to February, we had less manufacturing activity than expected. We also had durable good orders. Regular durable good orders came in at -1% versus 0.6%. So the discrepancy between regular durable good orders, where core durable good orders are actually a little bit more relevant, was higher. Yeah, man, look at the market. The pullback here kind of looks good. I kind of want to buy this dip. I'm going to go ahead and buy it at 391. Oh my gosh, I just bought 300 shares, guys. Or 100 shares of the SPY on accident. Bro, how many times am I going to do this week? How many times am I going to do this week? Hopefully it'll be green. It's going to be green. It's going to push up big. I'm not going to lose money. And there it goes. It just dropped big. It's going to push up big to 391.50, We're going to speak it into action, All right, we're flat. It's going to rip up 391.50s. I have no idea what it's going to do. Don't sue me. I might be wildly wrong about everything. Man, these accidental share sizes. Why was 100 shares put here on the SPY, though? That's my question. It's my fault completely. I'll give it one more chance, but I'm probably about to cut it. All right, look at Deutsche back up to almost 9. A little bit of a pop back up in everything here. I'm going to cut this. We just lost $15, $17 here. Just a mistake on my part. Again, I wanted to buy 25 shares, but somehow I had 100 shares implemented here. My fault completely. I got to be a little bit more careful. Disney doing well. Yeah, my Disney trade I'm green on already. So that's nice. Yeah, I mean, it's not really. I would have made money here too. So I should have stated it, but yeah, it's not really an opportunity missed. I don't have to take advantage of every move the market makes, and that's never how I trade. I trade based off of extension, and so this push over VWAP is cool and all. And I would have bought a little bit of shares and maybe made money if I didn't accidentally buy some higher shares. But like again, we're gonna talk about other stuff outside of the market sometimes. And again, I'm just instead of me sitting here quiet, silent, it's better for me to talk about something than nothing because again, if I was sitting here quiet, people would complain. And so then when I start talking about other stuff outside the market, then people complain about that. Then when I talk about stuff relevant to the market, I'm sure people are going to complain about something I say too. So in the end, you learn you can never please everybody. And again, it's all good. Yeah, Deutsche Bank, big rejection here. That's probably going to flush the SPY, I would assume here. It's probably going to flush the SPY too. Yeah, just to put that into perspective, how big of an order I just bought. So I bought 100 shares of the SPY. So I just bought a $39,000 position. Accidentally bought a $39,000 position on the SPY. Whoops. Luckily, I lost 15 bucks. Right, for sure. Johnny, you having family issues? Nah, man. Kara and I got a good relationship. Honestly, Kara and I have been together for freaking 12 years, man. But yeah, my family life's good. Yeah, I don't know. I could have held it and made money, but again, when I make an accident, I try to get out when I can. Having YouTube family issues, eh? What's the secret? Oh, you was talking to the guy? Oh, my bad, Neil. What's the secret? Bro, the secret is just communicate. Communicate, be happy, and be affectionate. Like the problem a lot of families face, like husband and wife sleeping in different beds. You know what I mean? Like not communicating, not being affectionate with each other. If that's going on, the marriage is probably done. No offense to anybody that is experiencing that, but it's like you gotta love each other. John's relationship advice. Gonna change the name of the channel to beginner relationships. But yeah, that's my advice. Yeah, she actually has to like you. Yeah, for sure. I mean, it's hard not to like me, but like, I guess it could happen. Yeah, you guys got me. I'm 31. You guys got me. Yeah, definitely top 3. SPY at 391. Let's see if we hold the support. I'm tempted to buy this again, but not. Look, I'm going to buy what I wanted to buy originally, which was 25, maybe 50 shares here. And then I'll try to give this a little bit more time leading it to the opening bell. Yeah, we'll put this back up on screen. Maybe I should have traded futures, but we're going to get ready to trade futures right now. There we go. 36, bro. 36? No, I'm not 36. Yeah, I'm 63 right now. You know, just turned 63 here. You know, full head of hair. I'm using Just for Men to paint my hair, you know, brown. I'm just for minute it up right now, you know. All right, guys, market is choppy. Oh, wait, I bought the SPY, didn't I? Completely forgot about the trade. How's this going? Okay, I'm down. That's okay. I don't trust the market to buy it right now, but I do trust some things. So maybe I'll buy some stuff. But maybe I'll cut this right now, too. All right, guys, we got about 22 minutes. All right, we got the little pop-up that we wanted here. Part of me wants to buy this, but again, I think I'm going to wait. I think the opening bell's got a little bit larger edge than right now in pre-market. I think the liquidity is a little bit lower in pre. Bullard speaking. This is called Quant Tower. Yeah, top 3. Yeah, but I've Chris, number one, anybody that really pushes me to unban him randomly, I'm going to assume that you're him in disguise. Okay, that's number one. Number 2 is that I've taken the approach. I had one guy. I'm not going to be specific about his name. But I had one guy who was like really active in the channel. But the problem is like, look, if you want to know how to make me like you versus dislike you in the chat, there's a couple things that will instantly make me dislike you. Right? One of those things is being unrealistic about gains, right? If you're out here screaming to make $10,000 every day, if you're out here pretending to make thousands and thousands of dollars every single day when it's obviously not true, I'm immediately going to look at you like you're just kind of full of crap. That's the first thing. You know, that will get me to, all right, I'm going to go ahead and cut my trade here. We took a little swing. It might bounce at the 200 EMA, less than $50 down on the day on TOS, but just a losing day, and it's all good there. But yeah, if you're out here just claiming to make wild sums of money and you never lose, right? It's one thing to say you make a bunch of money. It's a completely different thing to say you never lose, right? Like you'll have people where it's like they literally just whatever's moving on that specific day in penny stocks, they're literally like, yeah, I just made 10K on that. And it's like, did you really? You know, and I believe them at first, but if I never see them say, hey, I just lost 5-10K or whatever it is, then I'm just going to say, okay, this person's just lying to get attention. Right? That's the one way you'll make me dislike you. The other way is if I know you're new, you know, like I've had a guy who is like, yeah, John, thank you so much. I just started trading 2 months ago and you've helped me a ton. Thank you so much. And then I let him start working for the channel a little bit. And bro, I swear within 2 months, this guy is out here saying, hey guys, I've got 25 years of trading experience. I just made 70K yesterday. And I'm sitting there like, bro, what are you talking about? Like, you just started trading 2 months ago, bro. What are you talking about? I don't know if that's what he thought people wanted to hear, but it's like, dude, if you act that way, I'm immediately going to not like you, you know? The other way is say it, I told you so about everything, You know, like if you come out and you're like, hey, the SPY's going to hit 390. And then the next day you say, hey, the SPY's going to hit 395. And then the next day you say the SPY's going to hit 400. And then a week later, the SPY randomly taps 395 and you try to say, I told you so. I'm immediately going to dislike you. You know, the people I actually appreciate here are the ones that, the people I actually appreciate are the ones that are genuinely supportive regardless of anything else, you know, which is not a lot of them, you know, to be honest. Yeah, Bullard speaks at the same time as the opening bell. And then you got some people that are all those things combined, and I'm immediately just going to ignore those people. But yeah. Hoorah, that's right. Yeah, it's all good, Justin. I know you're trolling me a little bit, bro. You're good, dude. Like I said, I'm okay with that. Hey, thank you. I think people don't understand the goal of this channel. Like, the goal of this channel is to create a trading community that doesn't pressure people, that doesn't claim to be experts, that doesn't sell a course or a service to traders, like my own service at least. Like, I don't sell a course. I don't claim to be an expert. I don't act like a guru. I don't lie about how much I make. I just try to be genuinely honest about it, you know? And so a lot of people see me on YouTube and they think that what I want is to just look like I'm the most profitable, best trader ever. And I'm definitely top 3 all time, greatest ever. But that's the opposite of kind of how I am. There's too much liability in acting the first way, you know. SPY pull it back. I'm curious to see if we bounce at the 200 EMA. We're right at 390.60s. Right at 390.60s. Let's see if we actually hold. I'm in Disney now. We're break even on Disney mostly. Yeah, all good, Justin. It's all good, brother. You know. Yeah, definitely top 3.5 for sure of all time. John, can you explain how to trade futures? Kind of a broad question, OG. You know, kind of broad question, bro. What do you mean? What do you mean, like literally how to trade, or like do you mean strategies, or do you mean like how to buy and sell, man? PMI drops in 30 minutes exactly. Oh, and the final way to make me dislike you is if you pressure people to buy really sketchy, terrible penny stocks. If you do that, I'm immediately squinting my eyes and looking at you sketchy. So if you're telling somebody that a penny stock is going to for sure go up, you know, I'm going to judge you for it. John, how do you trade futures? Well, you go to a futures platform and you trade them. Just like stocks, you can buy market, buy bid, sell, ask. What futures are, they're commodity based. The reason they call them futures is because farmers back in the day wanted to hedge their crop prices, because what they do is they would grow crops, and then by the time it came to yield those crops, the prices of the crops had changed so much that they lost their profit. Their margins weren't good. So what they started to do is before they yielded their crops, they would sell what's called futures contracts, locking in the price that they would sell to people on. And they called them futures. And eventually that trickled into, you know, the broad commodity base. You could buy futures in stock, or you could buy futures on the E-mini, which is the S&P 500, which is what most people trade. You could buy futures in gas, cattle prices, corn, oil, natty gas, like whatever you want to do. I trade them on the S&P 500 futures, because the S&P 500 futures is how you get exposure to stocks and futures. So I can trade the S&P 500 right here, and there's no PDT rule. And that I can day trade it, I can short it. There's no PDT rule. And so it's the easiest way to get around the PDT rule is to trade futures, trade the S&P 500 futures. You can day trade the S&P 500, no restrictions with PDT rule. And again, if you want to try it out, the easier barrier of entry is a funded account program like Top Step. Top Step is the most legit futures funded program in my opinion. They're a sponsor of mine, and so I'm biased in their favor. But they give you a demo if you can hit their target. They basically test your profitability. They give you a demo if you can hit their targets while following their rules and phases. Then they fund you legitimately between 50 to 150K with a 90% split. Most day traders lose money, and so it's a lot cheaper to lose this way and really test your skill, have some pressure, than put up the money, which you're going to need like at least 10K to trade futures, I would say. Yeah, you can do it on gold as well. Yeah, there's the link if you want to check it out. Again, I'm biased in their favor. They're a sponsor of mine, but yeah, you can check them out there. Yeah, you can. Well, Top Step you can't, but like on Top Step you can't, but. All right, guys, we're starting to get a bounce up here. We still got about 10 minutes, 11 minutes till the actual market opens. Market bouncing up a little bit again, kind of going pretty sideways in the market right now. We dipped heavy. We've been basically sideways since 5 a.m. this morning, 6 a.m. this morning. So yeah, Bullard at 9:30. Market bouncing up a little bit now. All right, market popping back up a little bit. I still don't want to trade this yet. We still got 9 minutes. And again, it's pretty slow. I could try to stream what Bullard's saying if you guys want, but what the heck did I just do? What the heck? Okay. All right, so what Bullard is saying today is a presentation on quote credible and incredible disinflations. See if I can get into this. I'll stream it. It's a PDF file. But the PDF file's already out. Yeah, I mean, I can stream this. I don't think it's really going to be worth it, though, too. I'm trying to look at where he actually speaks to. Bro, I find it so weird how hard it is to find some of these speeches, bro. Like, they can't just play the freaking video. They can't say, here, the video is going to be streamed here, right? Instead, they got to, like, take an hour to put it out. Like, okay, if it starts in 7 minutes, where's the speech? I see the page the speech is supposed to come on, but, like, there's no actual presentation. You know? So it's like, how do you find them speaking? So maybe it's at the Federal, maybe it's on the Federal Reserve. St. Louis. Yes. They don't even schedule the live. Yeah, they just make this stuff so hard. They're not organized. Market's popping back up, though. Look at the market popping back up. Almost back up to 391s. Bullard hasn't spoken already, but you can see his PDF file. Basically of what he's going to say already. It's already out. I'll pull it up if I can find it, but because it will influence the market. But you would assume Bullard's going to be on the Fed Reserve Bank of St. Louis's YouTube channel, but it's not. They don't even have any live video, so they don't stream it all from there. Market's ridden back up, though, over the 200 EMA. Hold on, guys. I'll be right back. All right, we're back. Market's rebounded nicely, though. Let's see if it actually holds the volume weighted average price now. You can in futures. And again, if you want to try futures out, check out Top Step. Here's the Top Step link. You know, it's the easiest way to trade futures, in my opinion. But you got to pass a profitability test first. But it's a good middle ground where you're not losing that much if you lose, you know. SPY hit 391s here, 391s. Yeah, I don't know where to find the Bullard speech. Again, blame the Fed's unorganization. They're just not organized. I don't even know if unorganization. All right, market's all the way back up to 391.20s. Yeah, I don't see where Bullard's speaking. Market's flying up, though. He's supposed to speak in a couple minutes. Yeah, if he's speaking today, I don't see it anywhere because there's nowhere to find it. All right, guys. Deutsche rebounded 391s on the SPY, so big rebounds here. All right, guys. Opening bell's at about a minute. All right, market is flying up to look at this huge rip in the SPY here. Again, it goes back to what I said this morning, which is that the market is contrarian. If everybody's yelling doom and gloom, the chances of a bounce back are much higher. There's the opening bell, and now maybe we pull back at the opening bell. I'm not sure. But again, when everybody's screaming doom and gloom, the odds of a bounce back are high. When everybody's screaming bull market back, the odds of a pullback are high. And again, I think we're up so much over the last 20, 30 minutes, we might dip at the opening bell, but who knows? Again, I'm looking to for the Bullard stuff, but I don't see it. It even says they're not currently live streaming. All right, market's ripping up. I don't even know if he's speaking right now. All right, we do have PMI data in about 15 minutes, guys. Be ready. All right, getting a little dip at the opening bell. Like I said, I thought we might pull back because we were just up so much short term. Also depends on what Deutsche does. Deutsche pulling back to 903s here. The VWAP is right around 391s or so. But I'm not going to trade yet. We're going to wait it out. All right, big, decent, big pullback here. Big down wick. We've had 1, 2, 3. Remember what I said we might do at the open? I said I think we might pull back at the open because we're up so much. Again, you got to understand extension here, man. Like, again, when we make this type of move leading into the open, the odds that we're going to do this are very high. That's how I'm able to basically say, hey, I think we're going to pull back, and then we do, because you got to understand extension. The more we move down here, the more likely I am to buy this up. I'm going to try to buy it at the VWAP, but I also understand there's risk, and it might just keep going down. All right, we got 2 contracts here, and that's probably going to be all we're going to take on this specific one. Market looking weak, though, is the problem, so I'm not going to do this forever. We break this last candlestick, and we're going to cut it, but there we go. Retracement, back green. I'm going back and forth between green and red at this point. Could add a little bit more to it, but I think that's too much risk. I'd rather just try to build up a cushion first. Just like there's 1 minute pullbacks on the upside. They could also be on the downside as well. All right, we just took half off there. All right, we just unloaded on that too. So we just cut that. We got the green trade really quickly, and we'll just try to sit it out now. I don't trust it to continue going back too much. It's just kind of a momentum scale-in trade. But not a bad little $30 win so far in the first couple minutes of the open. We'll see what we do on the rest. All right, remember, guys, in 10 minutes, we got PMI data. 10 minutes. Should have held this, maybe. PMI data does drop in 10 minutes here, so y'all just be careful. I'm going to buy this to see if we get like a potential red to green move bounce. There's a little bounce so far. Maybe add to it if we pull back a little bit more, which I could see happening. And yeah, there it goes. All right, so there's 2. Ooh, this is looking like it's swinging. Luckily, we've got some cushion on the day to trade with. I'll take one more 3 contract position, and then I'll get it very ready to cut this if I need to. Give it a little bit of time to rebound back if it can. Starting to look that way. No, it's starting to not. There's a little retracement back up. Okay, green now. I like this move. This looks good, but it's also could go either way here. There we go. We'll pop back. We just took most of that off. We got one contract left. No way, if this doesn't work, we've already taken some off here. We don't have to worry about it as much. Yeah, we're going to cut the rest. So we're probably flat on that trade, I'm guessing. Let me see what it looks like. Okay. Yeah, we're flat. Which is what I guess how we have it. We might add right back here. All right, there's two contracts. Starting to write it back up. Took half off there and the other half off there. All right, so we just scalped it right back. Up about 40 something on the day, about 40 actually. So not bad. Win-loss ratio today is about 5-1. If you're talking about me, yeah, man, what a big gamble of a chart here. You know, wow. If it's gambling, it's pretty high edge gambling, I would say. All right, guys. Sideways choppy action right now. Yeah, I mean, you could call it gambling, and that's fine. It doesn't really matter too much. Again, my TD Ameritrade account, I'm green on the year, man. Like, again, so people can say it doesn't work or whatever I do doesn't work. Again, most of the time they're mad about the direction I'm trading. You know, like if you're really if you're really bearish and you see somebody take a long trade, you might get mad at that. But again, I don't think I really have to prove anything. And really, I'm debating on, well, maybe I shouldn't. We got PMI data dropping in about 4 minutes. I'll wait. But like I said, that's fine. You can think it's gambling. It's all good, man. See if the market ends up holding the volume weighted average price. Again, I don't put a lot of indicators on my chart because I think a lot of rookie traders kind of fill their charts with indicators trying to look cool. I have a structure in how I trade, which is specifically I look for heavy down wick action. If you look at this heavy down wick action like this, which is where I bought it, usually means that we're going to bounce up at least a small period of time. And then that's exactly what we got. Here's the breakdown now. And so we'll kind of pivot to a more short-based strategy for sure now. But we do, I might kind of wait to trade here. We got about 3 minutes until PMI data drops, which is manufacturing strength or weakness data. So we'll see if that data comes in positive, and I think that'll influence the market a lot too. We got PMI data today. I'm seeing if they had anything come out. A lot of the market's reacting to the Bullard. So Bullard says the U.S. response to bank stress is swift and appropriate, and has allowed monetary policy to focus on inflation. Um, just be careful. Bullard is speaking right now. I just don't know where. I've looked to see if I could find it, but they're not organized on the Fed's website. So here's the press release. Okay, so this is just if you want to read what Bullard said. This is what Bullard said. Bullard said, while financial stress has been on the rise in recent days, the macro-prudential policy response has been swift and appropriate. Meanwhile, the data on the real economy have been stronger than expected during the first quarter, and inflation remains too high. Front-loaded Fed policy has helped keep market-based measures of inflation expectations relatively low, which is helping disinflation prospects during 23. He said, quote, continued appropriate macro-prudential policy can contain financial stress, while appropriate monetary policy can continue to put downward pressure on inflation, he said. Bullard discussed recent developments that have led to volatile trading in banking and increased measures of financial stress. These include the closing of two banks with crypto-related strategies, Signature and Silvergate, the rapid run on deposits at Silicon Valley, and its closure by the FDIC, and the sale of Credit Suisse to UBS with Swiss assistance. He described the macro-prudential response as strong and said that regulatory authorities stand to take additional action as needed. Bullard went on to discuss the interest rate environment, noting that the Fed has been raising the policy rate over the last year to combat the highest inflation in the U.S. since the early 80s, even with considerable, this is him quoting again, even with considerable forward guidance, it is relatively common that not all financial entities adjust their business appropriately to the changing environment. He said, citing a few examples from the 80s and 90s, these events received considerable attention at the time, but were not ultimately harbingers of poor U.S. macroeconomic performance, end quote. He said, turning to the U.S. economy, Bullard noted that the incoming data, and we got the PMI data about to drop right now, so I'm going to get ready for that, and then we'll continue covering this. But yeah, PMI data drops basically right now. But yeah, here goes PMI data dropping right now. All right, PMI data came in at higher than expected all the way around. Higher PMI data, which means expanding manufacturing sector. So manufacturing PMI came in at 49.3 versus 47. Global composite PMI came in at 53.3 versus 47.5. And services PMI came in at 53.8 versus 50.5. So manufacturing strength coming in, boosting the market back up. Again, we covered this data very quickly. If you haven't already, subscribe. We cover all the major economic data. Here is the PMI data right here if you want to check it out. Again, higher than expected manufacturing data all the way around here. And again, we'll see if this reacts to the market anymore, but yeah, what I see is just it was a paper reported, and we found the paper, so we were trying to read it, but yeah. All right, so yeah, market's choppy, but yeah, you can see the PMI data at the bottom came in better than expected all the way around here. We'll put the rest of the data up, but the composite global PMI flash came in at 53.8 versus 50.5. We'll put the rest in the comment section. The Dixie's probably going to be moving up, but I don't know. It's never for sure a reaction, to be honest. All right, we're breaking lows here. Broke under 390. Again, we'll see if we bounce. Yeah, I think the market could interpret PMI data as worse than expected, specifically because expanding manufacturing might not be seen as a positive right now because of inflationary problems. Very flat market. I haven't traded much. We're a little green on the day, but not by much. I've been a little bit more hesitant to trade some of this because it's been super volatile. dropping down. My top step's acting a little off. All right, guys, markets try to bounce a little bit, but yeah, PMI data all came in higher than expected. Better than expected, basically, all the way around. All right, market is testing lows again. Bouncing back up short term here. Trying to get back up to 390s. We just took a little position on the short side here, but I'm not super confident in it. I just don't trust it. Cut that. A little bit of a pop-up. All right, we just scalped a little bit of the NQ here, just a little bit of the regular NQ. You can kind of see we're up about $125 on the day, scalping the regular NQ. So not bad. Honestly, I was trying to do it on the regular E-mini, but for whatever reason, they're having some weirdness on Top Step with the regular E-mini, so I wasn't able to actually do it. You know. I just scalped a little bit more just now on the regular NQ. We are now up about 211 on the day. What a gambler I am, guys. What a gambler. But yeah, we are up about 210, 211. I'll take it. Scalping momentum. Yeah, basically, we ripped up so much on this candle that we assumed that we would pull back and retrace short term, and we did, and then we cut it pretty quickly. That looks like a mountain. Hey, that's how my PMI. That's how I prefer my PMI to look. You can see, like I said, this is the really, like, people can call me a gambler, and that's fine. If you look at my win-loss ratio, look at this number right here. Okay, if y'all can't see that, what it is, it's a 9-to-1 win-loss ratio. So what this means today is that I have taken 10 trades and made money on 9 of them. Hey, listen, for a coin flip, for what people are calling gambling coin flip trades, I'll take it. You know, I'll take it. We got a nice little cushion now. Yeah, I see Binance down. I don't know what they're gonna do. Yeah, we're just trading with the trend here. Like, people can call it scalping, but like what we're really doing is trading with the trend. And I'll show you the trend that we're looking at to make these trades. I didn't mean to draw that. Here's the trend. That is the trend we're looking at. Very obvious, clear trend. And so what you'll see us do is you'll see a short at the top, cover at the bottom. And it might break past this trend. I'm not saying it's always going to remain there. But that's the trend I see right now. And again, I don't know if we're going to hold or like what we're going to do with regards to this trend, but that's the trend I see right now. All right, market's starting to bounce back a little bit. Looks like it's maybe going for red to green. A lot of this, you see the trend broke. Um, Physics. I remember the song. He randomly says all these words. All right, SPY looking like it wants to maybe do a red to green move. Here's the red to green move level. We broke out of that trend. There it is. All right, so we broke out of that trend. It looks like the market wants to go up. I see a hammer-like quick candle here. I'm going to buy a couple contracts just to start out. We're already pretty green on the day. I see the down wick here, and I might add up to 4 contracts here if we can. A little bit of a pop-up. We're going to take half off there. And we'll go ahead and take the rest off. So again, like you can see me scalping these moves, and people can call them gambles. What I'm actually looking at is I'm looking at this downward wick here. So if you see this downward wick, right, generally that shows, if it's very quick, generally it'll okay, think about the psychology of this. All right, so you got the candle wick. The candle wick looks like this. You know what that means is that candlestick had to go down and then get pushed up really, really quickly in order to form this wick right here. Right? When that happens, it means buying pressure. It doesn't always mean it. It's not universally going to work every time, or it's not always going to work every time. I mean, but it just signals momentum. Now, look, here's an up wick, which, you know, up wicks can work too, but sometimes that means we're going to pivot back down. Sometimes, not always, but I use wicks mixed with other strategies. So like the other strategy here is this. The other strategy is that we have a V-shaped pattern in the market. So a red to green move pattern. So we've moved down at the open, and now we're starting to move back up, which I think the momentum's on the upside. And so regardless of this up wick right here, I think it's kind of a cup and handle where it looks kind of like this, you know. So like here's this is the trend that you'll see a lot of the time, which is like it looks like a cup and handle pattern, you know, if that makes sense, right? So I hope all that makes sense. That's how I trade. That's how I'm kind of, you know, trading this. And so I hope it makes sense. We're up about 225 or so on the day. Yeah, I'm not going to short anything, but what I am doing is I don't really short patterns like this, but I do look for wicks to determine when I want to exit. And so we got 2 up wicks here, so we could pull back. We might not though. Like you also got to judge momentum. So like the momentum's obviously on the upside short term. They get a red to green pattern is powerful. Right? So when the SPY opens up weak and then rebounds completely back from that and does like this, it's called a cup and handle. So the momentum is obviously on the upside in that regard most of the time, and I still think it's there now. So you know, you don't always look at pure wick action. You look at a little bit of everything. Well, we've already flipped somewhat green, depending on where you look at it. So we're testing the opening range high, which is also a very important level. So I'm going to get rid of this trend line that we drew that eventually broke. So we are testing this opening range high right now, which is right there. Right, that's a very relevant level. And look, 3 big up wicks. We could be pulling back some now. Sometimes I'll buy these little dips, but not always. But again, you got the opening range high. So far, the price action today has been this. So it's a red to green momentum pattern. And it's not always going to work. You never really know for sure. But here's the P&L today. We get 11-to-1 profit loss ratio. All right, still move it up. Like I said, a lot of times I will buy those dips, but again, I think extension's a little bit too much on the upside now, so I just don't trust it enough to keep attacking that. Well, yeah, there's wicks on both sides for sure, but it's not okay. So it's not something where like I'm looking at just wicks. What I'm actually looking at that signals me to buy it where I did right around here is not just the wicks. The wicks after the candle's done, the wicks are less relevant. What I look for is the actual price action of the candle. And so if I see a candle forming and then all of a sudden, like if I see a candle forming and it's going down, and then all of a sudden I see the candle immediately form, like go push right back up and start to test the highs and form a wick like it did here, like this, form a wick like it did here where it got pushed down and then immediately shot back up, right? That is what I'm looking at more so than like historical wicks, right? Like historical wicks just mean that we're probably not about to break highs. So like you can see the 3 up wicks here, and then we pulled back a little bit. But again, like I said, when this happened, I said I usually buy this here, which I do, but too extended. Even if we ended up ripping up like this, it's just too extended. So it's more so the price action of the candle, I guess, is what I'm trying to say, than the historical wick, than like adding up the historical wicks to get momentum, if that makes sense. Here's a pretty big up wick here now, and so we might have some downward momentum, but again, it's not the end all be all of momentum. Like there's a lot of nuance to it, to be honest. When I see a big up wick like this, I kind of use the top of it as like a milestone level. So it's like if it can climb its way all the way back up here, then that's a pretty strong sign. If it can't, then you can look at it the other way. Yeah, guys, remember, we have this wall at the opening range high right here. I think that's what everybody's watching right now. All right, so we got the big wick here. We got the big pullback happening. The NASDAQ is pulling back a little bit more now too. But yeah, so big wick. We never broke that high again. We're starting to pull back a little bit now. Bullard had a speech, but I think it was just a I think it was just like a a paper that he put out there. I don't know if he actually spoke anywhere. I didn't see it live anywhere from my end. Yeah, I've slowed down my trading. If we pull back enough, maybe I'll buy it, but I think I just gotta chill and wait. And again, if you want to day trade like this is a funded account program for futures. If you're just now getting started day trading and you don't want to lose a ton of money in the beginning, I can't guarantee you're not going to lose money, of course, but like a large majority of day traders lose money in the beginning. I lost thousands of dollars when I first got started, so just understand that. But if you want kind of a way to have less risk but still test your skill, a funded account program makes a ton of sense, right? So I'm sponsored by Top Step, and I'm biased in their favor because they pay me money. But I genuinely think it's useful for traders because what they do is they test your skill, they test your profitability, and then if you're good enough and you can pass their testing, they fund you between $50,000 to $150,000 as a proprietary trader under their firm, and they keep 90, or they let you keep 90% of the profit. They only keep 10%. So, it's one of those situations where you can try to get funded, have some pressure to succeed. The futures market has no PDT rules, so you can day trade it short. But to trade it yourself, you probably need at least 10 to 15K. And if you want a little bit less risk in the beginning, you can try out a funded account program. And if you're good enough and you can pass it, again, you can get funded with 90% profit split. If you don't pass it, you're losing much less money than you would have if you would have put the money up yourself anyway. And so it's a perfect middle ground for new traders to test their skill. If they're good enough, they can get funded. If not, they're down. Base package on Top Step's $140 roughly if you use my link. So it's a lot cheaper way to learn, in my opinion. You still have some pressure, and trading's about learning how to perform under pressure. So you still have some of it, but not the extent of risking thousands of dollars. And again, I'm certainly biased in their favor. They're a sponsor of mine, but if you want to check them out, link is in the description for them. Again, you can get 20% off. Market's pushing up to test the highs here. Again, that cup and handle pattern is pretty strong pattern usually. Another one of my sponsors, guys, is called Chart Prime, and Chart Prime is a trading view indicator service if you want to check it out. Again, they're a sponsor of mine as well, so again, I'm biased in their favor, of course, just like anybody would be with a sponsor. But Chart Prime is really cool because what Chart Prime does is a custom trading view indicator service. So they'll give you custom alerts. They'll give you reversal signals. They'll show you where candlestick momentum. So we talked a lot about candlestick patterns today. And so they'll give you candlestick momentum that you can use on basically any time frame. And it's a trading view indicator service, so you can use it in stocks, crypto, forex, futures, whatever you want to use it on, you can use it on them. And again, it's just genuinely useful. So like here's Chart Prime on an hourly chart. So this is an hourly chart. So every candle represents an hour. But like, look, so they'll show you, look at the reversal up signal. And again, I can't guarantee you're going to make money. I can't guarantee these signals are going to be right. They're a sponsor of mine, so I'm biased in their favor. But look at this, possible reversal up and then a bounce over literal days of price action. Look, possible reversal down here, you get a drop. Possible reversal up here, you get a bounce over hours. And again, you can zoom it into more of like a day trading style thing as well. So like that's a 1 hour chart. Here's a 1 minute chart. And let's look at the price action today. And so what Chart Prime is really good at is identifying bottoms. Let me let this load again. Let me add it right back. So what Chart Prime is good at is identifying bottoms here. So let's wait. Gotta wait for it to show up. Okay, and yeah, look, so same thing. And so again, you can see just in their price action over the last couple hours, reversal down signal here. And then over like a 20+ minute period, you get a nice drop. Their oscillator is really strong as well. Look at their oscillator right here, chopping through it. And then look at where we bounce right off of that. Again, reversal up signal here. Bounce for the next like 20 or 30 minutes. And again, can't guarantee you're going to make money. Nobody can, but look at how accurate this can be. Look, here's pre-market session today. Reversal up, bounce, reversal down, right around, again, right when it hit that oscillator, drop, reversal up, bounce. And so again, it's called chart prime. You can also look at candlestick momentum, which does look at wicks. Hammer candles are kind of what I showed you earlier. And look, you can see the hammer candle momentum here. So it'll show you the hammer candles for you and a bunch of other candles as well. And then look, you get a bounce here. And so again, it's called Chart Prime, Trading View Indicator Service, $35 a month. So very, very cheap. And again, I'm certainly biased in their favor, but can be very useful. And so again, if you want to check it out, here's the link. The great way to help support our free content here. Like my big thing, my mission here is to create a free resourcing community. And so like, yes, I have sponsors that subsidize the channel, just like a radio station, a free radio station have sponsors. But again, I don't claim to be an expert. I don't claim to be a guru. I always tell you guys I'm biased in sponsors' favor. I appreciate the love and support, guys. Thank you guys so much. I genuinely appreciate the support. And yeah, if you want to check it out, here's the link. That's a subscription. But yeah, if you want to check it out, there's the link. Great way to help support the channel. But yeah, y'all be good. I'll see you guys later. Y'all have a happy weekend. I'm going to go enjoy my weekend, man. We've been working all week. It's time for me to just kind of sit back, enjoy life. Y'all have a good weekend. But yeah, guys, y'all be good. Peace.